people, but I don't think it's a bad idea once in a while, just kind of to recollect everything that we have, right? In terms of Discord and everything that we do. So that way you guys can be all on the same page, right? What is it that what we're doing, and how do you piece all of this puzzle together? I'm not really introducing anything that doesn't complement what we do, right? So when I add stuff and throw stuff at you guys, it's not really like, hey, there's a ICT FVG here, and we're gonna shift to this strategy. I do what works for me, and if you guys find something that complements well, whether it's ICT, whether it's WeWap, or whether it's, I'm not really a big fan of EMAs, but if you guys like EMAs and stuff like that, that's sure, right? Do the EMAs, but it really takes you away from the market information, market auction theory. You just kind of understand it, right? So everything that I do has a connection somehow, and once you start connecting those dots, you will be able to put something together how you trade in your style. I think Friday I was trading, and I don't know who said, maybe it was Dumpster or somebody else, like you go in and out so quick. Well, and you guys know if the range is tight, I am super quick. I'm in and out within 15, 20 seconds. Sometimes I hit higher contracts based on what I'm seeing. Sometimes I don't hit as hard, right? And that's depending on how the market reacts, I also kind of adapt to it. And that's something that I learned, through years, right, of trading and years of losing. Hey, I'm going heavy here and the market's not really behaving that. It's like going after hours and going 20 contracts on ES and hoping that you get a direction or a bounce of a level that should be a bounce in the regular trading hours and volume should be there. You're not going to get the same responses, right? People are not, it's not liquid. There's not a lot of inventory for up or down. Therefore, you adapt, and that's what I do. Let me see if I can click here. So I added this slide just for newer people. Going through the PowerPoint, make sure you understand it, right? When I say understand it, make sure you read all the bullets, and then if you have questions or if you have any graphics that we show and you don't understand it, just ask questions, right? And believe it or not, I would say a lot of people that go back through the PowerPoint once or twice, they learn or pick up something that they didn't last time. And it's almost like watching a movie or reading a book. First time you go through it, do you guys pick up on everything? Probably not. Neither do I. Right? You read it again and again, and then something clicks every time you do that, right? So reading this PowerPoint, I think will help you. There's a couple of books that I do suggest, like Trading in the Zone. Honestly, trading is more mental than it is technical. A lot of you guys that I've worked on with on a one-on-one basis, right? When we have the meetings, a lot of you guys have the technical standpoint, but then it's like I average down here and I increase my size 1000x here, like from 1x to 10x, and that's not trading technical analysis. That's your mental state being disciplined on keeping that together and repeating the process over and over. So I do suggest that you guys spend some time reading Trading in the Zone or any other mental state book on trading, and we have a few in the Discord, right? By reading this PowerPoint, I do think the bullet number 3, like the lingo volume profile, because a lot of people get scared. You join the Discord, you see people talking about LVN, HVN, CPOX, first, sig, second. I'll be terrified too. But how can you get better? I mean, if you're not putting true effort in it, I don't think you can get true results out of it either. What you put in is what you get out in this game. And if you're not willing to put time in, forget about it. You're not going to go last long. No, maybe not the best thing for you. At the end, I do suggest you attend the watch lists, and a lot of people that did succeed, and I've seen growth from these people. There's a handful of them in this call right now. They started off, I'm not picking on Cuban, but I would say Cuban came in clueless, right? He didn't know what the hell volume is. He didn't know what volume profile is. And now you see Cuban making $3,600 a day, $500 a day, and he's, it's starting to click.
What I say, computer was.
Yeah, exactly. Nothing. So, and I'm not saying it's all because of me or Drew but I think it's, we have a saying where I come from is that, it takes a community to raise a kid. Well, I think in trading, you also sometimes need a community or a mentorship or some kind of guidelines. Is there a lot of free context on YouTube now, more so than 15 years ago, and like what you can learn? Yeah. but you go scrap YouTube and pick up what you need to pick up to have it in consolidated view. Right? A lot of people don't have the discipline to stay focused on what they're learning. They get carried over, they go elsewhere, right? You get into these rabbit holes, and then I don't know if you're picking up what you're picking up. And I've done it before with different topics, right? I mean, you guys know I'm crazy about the grass cutting. So I go on the topics and I end up with the moles, how to kill moles, which have nothing to do with the grass. And it's just like, oh crap, let me go back to what I was trying to pick up. And same in here, stay focused, right? If you're trying to learn volume profile, learn the volume profile in depth. Next, if you're trying to pick up, let's say, combining volume profile with the orbs, right? If you have, for instance, just an example, high volume node with the orb high and we are above it, well, it's a support, right? That sounds like a really good setup. But then let's say we add the footprint charts and you see an absorption happening as they're coming back to that HVN and the orb high. Now you have a really strong confluence and a high probability the trade would work in your favor. And that's, what the PowerPoint will help you, and along with, spending some time with the charts. So with that being said, let's start right with the market auction theory. So the whole market behaves off of market auction theory, right? People that don't understand this really have a hard time grasping the market. And like, many times I bring up the peanut butter, right? The example, and most of you probably know it of it, but it truly is that. It's people bidding the price higher or selling it to go lower in aggression, right? And there's, we joke around, but there's never really more buyers or sellers. It's just how they enter the market, right? If they're entering market order buys, that's ask side, that's aggressive. If they're entering market sells, a bid, that's also aggressive, right? And then you have the passive buyers and sellers. And that's where, the tricks happen in the market, right? If we knew everything on the ask side was bullish and everything on the bid side, let's say, is bearish, how easy would the market be? It would be a piece of cake. Like you'd be able to match the orders much quicker, but they haven't really found an algorithm that can match the orders. You add the complexity of the options and the hedging on top of that, and it's like, oh crap. And people only think about options isolated sometimes when they see the order flow and options, right? Well, think about it. If I'm short Tesla, let's say 5,000 shares, and I want to protect my short, can I not go long on the options?
Yeah.
And if somebody only sees the isolated long on the options, what do they instantly think? Oh, this is bullish. This is above the ask. And they can definitely do that, guys. You do not know the intention of the people that are buying. Unless somebody calls you and it's like, hey, I shorted 5,000 and I'm buying a hedge. Remember, options were intended for hedging, but the market auction theory stands true for both, right? It's the bid and the ask and supply and demand. So same here, right? On this chart where market trades basically from balance to imbalance, and then it's either accepted or rejected, right? Sometimes, if you guys remember March 31st till about maybe late April, we were in a strong balance. And I think we made some really solid trades, trading the tops and the bottoms of the first SIG, 2-3 SIG. And then eventually they broke out, and then we got this run to 4,500, right? So now, you're trying to see, are they going to hold that range? And then there's, micro and macro structures within, like whether it's on a bigger scale, is it a range? If you grab like POC from September of 21 to current, we're still in the value area. Right, so that tells you in some aspect of longer term traders and long term participants, we're still in balance, right? So does this slide make sense to everyone?
Yes.
Okay. So just to kind of continue, right? So you have the passive auctions and you have the active auctions. So does everybody understand the difference between passive and active?
Yes.
Yes.
Okay. So usually passive, think about passive in terms of limit orders, sitting, or sometimes what they do, especially on earnings. If you go back and study the earnings of some companies that tend to gap, like maybe look at Tesla, they usually after hours would place, they would buy way above ask to trigger, right? They would trigger some algorithms to start buying. And even though they have a risk, let's say 15 points risk on Tesla because they went way above the ask, they're hoping that they surpass a certain level of algos, which they use, and that they trigger buying and triggers a really crazy runoff. Let me give you an idea, like NVIDIA, right? I mean, you gap up, you're almost $1 trillion market cap and you gap up 100 points. I mean, that's unheard of in normal auctions, right? To go $100 in a day. So they use passive auctions to kind of gap it up and trigger the active participants to come in, short-term traders to come in and look for a price to drive it up, or whatever the trading strategy is to kind of get in with market orders, right? The only people that don't lose in this game is who?
It makes it.
Yeah. So who doesn't lose in the casino?
The casino.
The house.
The house never loses, right? So the idea of this is the dealers, the locals, as we call them, or market makers, whatever you guys want to call them, right? They're just in between facilitating the trade. And when you think about, the same as blackjack table, right? You come in and you have 7 other people, right? Or 6, whatever, right? Playing, and you have the dealer, right? The house usually tends to knock out a few people to your left and right. And if you're somewhat good with statistics and probabilities, you have a chance, right? Slight odds to play it. And then if you do it too much, you go in jail or you get beat up. So the odds are really against you in some of these situations. But that's why, understanding the market auction, how it's behaving, the bidding, the selling, and where the inventory is. And when I say where the inventory is, and we've talked about this in the Discord, you're going up into the resistance and you see a huge number on the ask size, right? That would immediately mean that somebody had a limit sell order there, right? And they're looking to get rid of their inventory. And that's kind of what moves the markets, right? This guy sold a lot, somebody had to buy it. It's the manner what happens after that limit order. Do we break above or we go below? Right? And we'll get into that, but that's basically your market auction theory of the bidding and selling. And it's the same concepts that we talked about, in the peanut butter, right? I'm selling peanut butter at $5, and I'm willing to pay $5.50. If they are, and my quantity demanded for that at that price has not really changed, most likely I will increase the price again so I can maximize my profits. And as long as we have people that believe the value is fair and they can get more from this point higher, they're going to be market buyers, right? Because they feel like they missed it. And those are the market participants that drive the price, and they're bidding and buying at ask, right? Until a big boy comes in and sells it, and then we reverse, right? I think I covered this, right? I would just make sure that you guys understand when you think about participants in the market, the 3rd and 4 bullets, right? Anxiety level for short-term participant ranges from active to passive, right? You're active, you're trading, and then you step away till hopefully your setup shows up and you take that, right? Anxiety level for long-term participants, if I have a long-term sell at 4,600 on ES, are you really participating in the market? If I have a sell at 4,600 and we're at 4,400 now, no, you're just relaxing and you're waiting. As that level comes, as we bid the price higher to that level, your anxiety level goes from passive to active, because now your limit orders might become hit, right? You pair that limit order with a bunch of market orders, and you got a trade. Okay. Buying and selling. So this is basically what we've covered multiple times. The long-term buyer will not be attractive at a long time frame seller. And I would say 95% of the time, unless there's an anomaly, this is true, right? It's rare that, for instance, if somebody was a long-term buyer of NVIDIA of $5 in large quantities, could they be a long-term seller at 100? Yeah. But how many of those do we have? Those are your first investors. Those are the first people that come into the market or a stock, and that they get a lot more insight than a regular investor like me and yourself. Right? They're the early adopters, and they know a little bit more than we do. And now let's say they put in $100,000 in NVIDIA. Well, that $100,000 in NVIDIA, $5, and now at 500 makes a big difference, right? So they could be, but the odds are very small because not a lot of people would be on it if there were. it wouldn't be such low price at that time because it would drive the price higher. The volume would trigger some people to scan for volume, so it wouldn't be there. So the odds of long-term buyer and seller to cross path on a DOM is very, very minimal. What would happen to the market auction theory if we only had long-term buyers and long-term sellers?
We probably wouldn't have much intraday move.
Oh, the price would not move. You would have just a bunch of gap ups, right? So that's where, whether it's retail or short-term, traders, institutional traders that come in, they move the markets, right? The market buys, market sells, tight ranges, limit sells, limit buys. That's what moves the markets, right? And they create liquidity before they pop a next move to reach those limit buys or limit sells. Okay. The key components, right, of market auction theory, and also I would say on the footprint charts, minus the time, is the time, price, and volume, right? I would say time regulates the market, right? Basically tells you, hey, how many, if you guys think about the recent bounce at 44.19.5, how much time did you have opportunity to go along there? You guys have a lot of time to decide if you're going to go long or not.
No.
Nope.
Just it hit and it popped 100 points. So your time and opportunity was your opportunity was regulated by time. How much time is spent at that level? It was minimal, right? The price came there. Price is basically a discovery tool. If you think about what we talk about, maximizing profits, if you have your own business, you increase the price till there's no demand, and demand falls off for your product, whatever you're selling. And then you will find a sweet price, and you would look at your sales and find, oh, at this price, I sold the most of this product, and therefore, what are you going to do? You're going to drop the price to that level because that's where the buyers are. And price is used to find where's demand, where's the fair value, right? Where's the extreme unfair value on the high and extreme unfair value at the low, right? So when you combine price, time, and volume, you get what? You get value. So if you think about your own timing, right? Sometimes we're in a trade like Friday, I think I was in for like 13 seconds. I made $2,000, and now for me, the rate of return on that trade is huge. I spent 13 seconds, made 2K. I can't do that in any other job. So time can be used in many aspects in trading, right? Whether it's your time, but this is, pertaining to the market time and opportunity that we get. And that's usually the market profiles, the TPOs, time, price, opportunity, but that's where it falls. But these are the three components that you guys really, really have to understand. And we kind of go into the details here. Like I mentioned, it's the regulator, the number of hours from open to close. There's just your boundaries, right? That's when the market is open. If you're to, in my little city here, we have a flea market every Saturday, right? Between 7 and 11. What happens if I show up at 12?
Closed.
Yeah, I'm just going to show up, but there's no market.
Nope.
And it's the same here, right? It's just regulating, right? It makes sure that buyers and sellers are disciplined to show up at this time, right? So time and the given price yields volume, and volume is the one that basically confirms your trades, right? If we are moving up with no volume, that price is not being confirmed, right? That's the key component of the volume, and I mentioned this multiple times. We have to use volume for confirmation. When you're progressing from value areas, when you're progressing from zones or ranges, you need volume to pick up on those. And same with footprint charts, right? If you're breaking a level, let's say resistance, and you're not seeing any buy side imbalances, what would that tell you? That tells you there's not aggressive buyers. They're not going to break through that. If they break through that, let's say key resistance with not a lot of power on buying, that tells you most likely the zone that you're coming from, the below zone, you're going to find the mean, find the POC of that zone, and there's a high chance you're going to hit that. Yeah. I would say last week, or I believe last week when we hit the 49.15, I wrote there's a really, really high chance we're going to hit that 44.20, if you guys remember. And they executed. We fell on the value area high twice, and priors were not interested. And you look at the footprint charts, there was a lot of completed auctions, right? There was 2 failed auctions followed by a complete auction, and then once they completed it, they just took off. Okay. This is, important to know if you're new, if you don't understand it. Aggressive means that they're buying with the market orders. Passive is your, passive sellers and buyers. Passive buyers show up where? On the bid or an ask?
Bid.
Bid, yeah, and passive sellers show up on the ask, right? Aggressive buyers also show on the ask, right? So it's not straightforward when you look at an order flow. It's not a, oh my God, this is magic, I can see everything. You still can't pair it because there's, 4 different participants, 2 on each side and 4 total. So it makes it a little bit harder, right? But based on the context of the market, we can tell are they aggressive or passive and then kind of figure it out from there. So now this is where we get into the, what the class is about, right? We're going to start with the basics, right? What is a footprint chart? It really is not a strategy, guys. The footprint charts, if you guys switch from candles to ashis, footprints is just another chart type. You're basically taking a candlestick candle and you're switching it to footprint to see on that candle, how did it go from this price to that price? Because it shows you different price levels and bid and ask. So at what point was it weak? Was it strong on the top if you're in a bullish trend, or was it on the bottom, or was it really diverging, meaning it was going up and using delta, we don't see the aggressive buyers, right? So footprints is not like this whole new strategy. Can you trade off a footprint alone? Yes, if you're really good. I would say I'm not that good, like 100% good, where I can only use footprint charts to trade. Could I make money in the market? Yeah, but can you also get, played by? Yeah, of course. They set a lot of traps, right? If you look at some of the footprint charts and you see you're at top of the resistance and you see a buying imbalance that breaks the top and then immediately come back, who do you think got trapped? All the longs got screwed. They did the market buys, but there was a whole, like I call them the iceberg orders, just sitting there. And he's like, okay, come on, bring it. I'll give you all the peanut butter you want at this price. Because if I'm a seller, I'm willing to sell all of my inventory at this level because he yields profits. So they get trapped and then they're not able to pass that level. Now it's the goal of the seller to make sure we don't go above that level and that I offload my inventory, right? Just like I talked about here, volume, price, and time. The size is what kind of matters here. I'm sure don't make any dumb comments. Size is what matters on an order flow and the footprint charts, right? It's important that you understand, right? When you look at a footprint, that you see, if you're trading, let's say 4-hour footprint, it's going to have totally different numbers than it's going to have on the 5 minutes, right? Because 5-minute candles made up of different volume, less volume than the 4-hour candle. 4-hour candle will have multiple 5-minute candles, so the cumulative volume is going to be higher. So it's going to be on you to look at these charts and understand what is a large number on the footprint, right? If you look at 5 minutes on ES, seeing like 500, 600 orders is pretty good size, right? And then when you get familiar with the data and the sizes, and maybe you just create a cheat sheet, right? You look at 7 days, you grab the averages in 5 minutes and you find the average in 5 minutes. So you know what is big, what is small, right? And I can't tell you that, right? Because it depends what time frame you trade. If you trade 1 minute, it's going to be different for you than it is for me. You're going to go, below 100 on 1 minute. And then if you see something bigger than 100 pop up, you're going to be, oh man, that size is huge. Okay. So what we're going to cover is the terminology. There's going to have absorption, divergence, delta flip, stacked imbalances, HV and cluster volume, and then approaching support and resistance, and then candle POCs. So we're familiar with, day session POCs, right? Candlesticks, if you think about it, every candle has its POC. Does that make sense?
Yes.
Yes.
Okay. Every candle will have POC because we're looking at a footprint chart. Let's say on 5 minutes, we're going to know where majority of the volume was on that candle. And hence, that's the POC. Most traded volume is the POC. That's the equilibrium. So this is an old chart that, introductory, a few months back that we put in. But now that you guys have seen some footprints, hopefully makes sense. So if you think about passive sellers, we said they show up on the ask, right? Those people provide liquidity in the ask section, right? Aggressive buyers take what? They take the liquidity from the ask because they're just trying to hop in. If they want to buy it, they're going to buy it at 101 if they want to get in now. Aggressive sellers, they take the liquidity from the bid. If I'm trying to push this price down, let's say I want to get rid of my inventory quick, I have to sell it at 99. And if this level is taken out, I have to sell it at 98 and so on. So the aggressive sellers will show on the bid side, right? And then the passive buyers, let's say this is AMD stock because it's in that range. I want to buy AMD at $90 or $92. I can just put a limit buy here and I'll basically be sitting here and I will show up on this tape, right? Sometimes they ghost the orders, meaning that, as you come to the level, you see them gone. And sometimes you'll hear me and Drew talk, he's looking at heat map and he's like, yeah, those orders are gone. So they make you think that there's a lot of liquidity at that level, whether it's on the ask, meaning sell, or on the bottom of the buy on the bid side, they're looking to buy it, and then immediately they remove it, and then the price, if you remove orders on the bid side, most likely price is gonna kind of dump down, right? Okay. So here, for price to move up one level, buyers must absorb all these sellers, meaning if I want to go from 99 to 100, we need a little bit more buyers here, right? We need more buyers and we need market buyers to come in and take, right? When you think about footprint versus just the regular times of sale, right? Footprints show you the executed orders, right? If you look at level two doesn't show you the executed orders, right? Level 2 shows you the limit buy and sells. So the footprints really tell you what happened and how the price behaved and what type of buyers and sellers. Okay. Does this make sense to everyone? It's important you guys understand this because everything builds on from this. So I added a slide here to help you guys understand visually like where the passive sellers are. If you're approaching a level of resistance, you can expect to see a large number on the ask side because they're trying to get rid of it. Limit sellers, passive sellers. I'm sitting here looking to sell at this price. Okay, aggressive sellers, if I don't want to wait for this price, let's say this is $100, and I have to get rid of it now, I'm willing to accept 99. Therefore, I switched my price selling point from 100 to 99. That would make you aggressive. If you're selling peanut butter at $10 and you're not getting any offers at 10, but you have a lot of offers at, let's say, 9.25, and you sell at 9.25, that would make you somewhat like a desperate seller, right? Therefore, you become an aggressive seller. Does that make sense?
Yes.
Does everybody understand that? It's important that everybody can talk about this slide.
I have a question, Shorty.
Yep.
All right. So when you see 55 on the right, those are the passive sellers. If price goes through that, that means you're saying that it's been absorbed. But if it's not going through that, then there's some other aggressive entering the market. Is that what's happening?
That's correct. And there's a setup we'll talk about when you see a large ask side right here. Let's say we're at the, let's call it 4,500 here level. And you see this level, just let's say it's 55,000 contracts being on the ask side. And then the price goes lower. Let's say you're in a 5-minute candle, right? And then you get an imbalance on selling. That's usually a good entry for short. Because now you know that there was a limit seller that was high and they absorbed all the buy market orders, aggressors, and now an aggressive seller stepped in. That means he's trying to push the price down. And usually that's a good sign to short.
Okay. And then those numbers that you have, like on the footprint chart right now, like for example, the 120.
You broke up a little bit.
Right.
I heard 123. That's all I heard.
Oh, sorry. I said, can you hear me?
I can hear you now. Yeah.
Okay. All right. So, for example, the 120, that's aggressive sellers, but that is also correct?
You keep breaking. Is it for me only? If it is, I'll have to restart something. But
he's breaking up.
No,
No, I can't hear him either.
He breaks up.
Okay. Good.
I think
I
think the question is that number 123, that's the number of bids on whatever the price is. I think that's what he's saying.
No,
That's my question anyway.
Okay. I'm asking if the aggressive seller's number is equal to the passive buyer's. Like when we see 123, is that also the passive buyers?
Right here, no, passive buyers don't show up on when you're trending up and approaching resistance. You don't get passive buyers at the top.
Oh, okay. So that's what.
We're looking
But
for passive buyers to see them on the bottom as you're approaching certain level where it stops the auction, right? And basically you're coming down and you see, you see a large number on the bid side, right? That's telling you, hey, limit order buy hit, right? And then if you see, let's say next candle, you see an aggressive ask, right? Where it flips, an aggressive buyer has an imbalance on the ask side, that confirms that this was a strong buyer, absorbed all the sells, and then you go higher. Usually, typically, you don't see a bunch of passive buys at the top.
Okay.
And you can tell
And
it's
so
at the
if-
top as well because there's a 0 on the bid.
Yeah, if it completes the auction,
Complete
right, and we'll
auction.
cover that, right, you'll have a 0 on the bid side.
Okay, so on the footprint chart, basically, that's how you know there's a. Okay.
I'll say yes, I heard half of it, and I think you said the right thing.
Okay. Sorry.
Okay. So here, and this is what complicates the market, right? If we only had aggressive buyers on the right and aggressive sellers on the left, how difficult would the trading be? But it would be super easy. We would know where they are and what their intentions are. But when you see a mix of numbers, sometimes you see about numbers, right, that don't mean anything. Like these, there's not a lot of imbalance. They're close. It means they're just happily auctioning in between. They're happy with the prices until you see some imbalances. Like when you read the chart, you're actually going, when you read a chart, you're going diagonal. It's here to here. It's here to here, here to here, here to here. Right. So now if you look at this, 100 to 156 is not 2 to 1. This one's not 2 to 1. This one here has a imbalance, right? It's probably like 10 times more, like 15 times almost in between these two, right? So there's some aggressive buyers here. You have some limit orders that come in, then you get an aggressive buyer here. And this usually is a good, a buy based on the footprint, depending on how Delta was. Okay. Any questions on this? It's important you guys understand the sellers, how to kind of, you will not always be right. And I'm not always right because we can't be. I don't know the intentions when I see the orders. Can they fake us, put a lot of passive, large number on the ask as we're approaching, resistance and then they burst through? Yeah, of course they can do that.
So when there's an imbalance on the ask side with the aggressive buyers there in the example at the bottom, so since there's such an imbalance of people trying to buy, you would expect the price to keep going up for a while?
Yeah. And usually, it depends what time frame you're on. If this was a 5-minute footprint here, a 5-minute candle, if you see this buying here at the limit, then you can look at the delta right on the bottom and you can see, hey, is it being absorbed? If you see, delta negative, let's say 1500 or something large, right, depending on the time frame, you see a large delta and you see this buyer, you really can't trust it that much. You need to see a shift, right, a flip in the delta, right? Even if it's not green, if it goes from negative 1500 to negative 200, that's a pretty good absorption, right? They absorbed all the sells, they took them, and then you see aggressive buyers and you see green delta on the next candle. That's usually a strong buying opportunity, right? You get in and then you would look at the levels where you want to take off.
And then if we were reaching the top part and the delta was going negative, would that mean that it's starting to level off? And kind of
It's leveling off, and that means the sellers are stepping in and they like. So think about it. A peanut butter was so cheap that I was willing to buy it. Now I got to the point where I can make a profit on this and I'm willing to sell it. People are going to be able to sell it again back to you. And if you're a buyer here and you don't sell here, that that's on you for not reading that the market is structuring in kind of like a bracket, right? A mini bracket. So a lot of people want to catch 100 points. Sometimes it's not the 100 points, it's catching 10 points 10 times.
Also, is the imbalance only read from the left side and then up one to the right? It's never like from the left side down to the right?
No, it works both
Or
ways.
it works both
So,
ways? Okay.
yeah, so if there was, let's say, 100 to 156, let's say this number was 456, and in trading systems, right, in software, they would highlight this number as red. And then that would mean it's an imbalance, right? And if there's a green, like this number would be green on Quant Power or Ninja Trader, it would be green here. That means there's a buying imbalance on this side.
Yeah.
And when you get multiple, if you get 3 in a row, like buy stacked imbalances, let's say this one had an imbalance, this one, this gets highlighted as a stacked imbalance and as a zone, and we'll cover that.
Sorry, I mean like you know how at the top, right, where you highlighted the 123 and the 55. But would we ever look at the 0 and 100, or is it only?
Like... Oh no, this way.
Okay. Okay.
Mm-hmm.
Yeah, Shorty, can you explain the diagonal thing again? I lost you for a second there.
Yeah.
Like reading it.
I'm bidding 5 right here. They're selling 5. You don't look at it horizontally. You look at the order between these and this one, right? So you can't. If I'm selling at 5 and you're buying at 5 the whole time, is the market gonna fluctuate?
No.
If I'm selling at 550, you're offering 5. There's a spread in between. It can fluctuate, which leads to speculation. If there was no spread, the volatility would be what?
Oh, it would be flat.
It would be flat. So you have to look at it horizontally. If you're selling, what do you want to sell peanut butter for? Tell me a price.
As much as you can get it.
Yeah, but what price you want to sell it?
I don't know, 200.
Okay, I'll give you 190. Me as one buyer, I'm willing to pay 190. So the 190 level is here. The 200 is here. We're off. You're off by $10. So what needs to happen? Either we need other buyers like yourself to help bid the price to get to 200, and you get the 200. Or if you're a seller and you're getting a little, you have a lot of inventory, you might go bad and you want to sell it, then you'd be like, okay, how about 195?
Yeah.
Right. So that shows weakness in selling. So that's why you look at it diagonally, because if you looked at it flat, it's the same price level. Right. You look at it always diagonal. Does that make sense?
Yes.
Yes, thank you.
Let me see if I can. Is anybody any questions here? Does everybody understand?
So far, yeah.
Okay.
I understand it, but I had
I'm kind of curious.
Go ahead.
When I was reading the
Sorry,
Trader
Sheila.
Dale order flow, it stated for imbalances 3-1. I noticed you said 2-1. Do you use the 2-1 instead of 3-1?
No, I use 3-1. It's a standard to use 369.
Okay.
Can you use 2-1? Yeah. I mean, but think about it. Trader Dale or I can't define what imbalance you trade. If you like to trade 2-1 and you set up a system for 2-1, well, think about it. If you set up a system for 2-1, what happens to your reward?
It gets cut off short.
It gets cut off short. If I'm trading 3-1, I expect a little bit more movement.
Yeah.
So you're waiting. The setup is not probably as often as 2-1. Therefore, your patience has to what?
More patient.
Increase. Yeah, you have to be more
even
patient.
3-1 pops more than you'd figure, though.
Well, lately it has. I would like for you to go back to 2012 and 15 and look for them.
Yeah.
I know what you mean.
Especially, not trying to go conspiracy, but once the government injects so much liquidity, like, whether it's repos, reverses, and the bonds market are acting in an inversion, and there's tons of liquidity being injected in 2020, you're going to have a lot of imbalances. And you guys see the other day, SPY moved up 7 points.
Yeah, it's a lot for SPY.
I mean, guys, it's not a penny stock. It's the whole market moved 7 points, went to the top and dropped. Like, what? How can you move a market that this size 7 points intraday and reverse it back? Like, that's, it tells you there's a lot of unusual stuff. And I dabbed back in options like Friday and Thursday, right? I'm trying to see if I can, but I didn't play 0DT, if you guys noticed. right? I was playing Mondays, expiration on Friday. I just lost, being transparent, lost trust in myself to time them because I see these volatile reversals where it's like if I look away or I answer to my wife on a kid or something, I'm done. Right? The opportunity to buy or sell is gone, and my, instead of being green, I'm red. So it really, took me away from playing 0DT SPX as much as we used to play it. Okay. Any other questions on this? I think I heard another person here.
Yeah, I'm just curious. How do you know those are sellers or buyers? Just look at that number 55, let's say. How do you know those are sellers?
Sellers, passive sellers show up on the ask side. Aggressive buyers also show up on the ask side. The aggressive sellers and passive buyers show on the bid. If I see a large number on the ask side and price is not going higher, when I say large, I mean large for that candle time frame. If this is a 5-minute time frame and this number jumps to 10,000 on the ask side and price doesn't go up, what do you think happened?
Absorption.
Okay, let's give you an example of peanut butter. Great, so you understand it. I have peanut butter jars, right? And I sell them. And $10, let's say this is $10. In my book, I put that I sold off $10,000, 10,000 jars right here. Right? I depleted my inventory. I had, to sell it here. And then somebody comes in and wants to buy more inventory at 10,000 and I don't have any. Where do you think price will go? This is a trick question. So
Higher?
anyone else?
Higher.
No. Price will go down.
If I'm a seller and you took all my inventory off and I want to buy more, where does the price go?
It has to go higher.
It has to go higher. It was a trick question, Cuban.
Gotcha.
If I was a seller here of 10,000 jars, right? And then there's some other sellers that are coming in, but there's no buyers anymore at this price.
Yeah.
Now, if there's no more buyers because we absorbed them all with that 10,000 jar and somebody wants to buy 2 jars, right? Well, this seller, and he's offering 950, this guy might be like, okay, I'll give you 950 and the price drops. But now if you get aggressive sellers, like, oh God, this guy sold a lot here. He sold Apple shares right here. And now price doesn't make a higher high, right? There's a lot of supply. That tells you how big the inventory is at this level. If we pop above it, that tells you that, absorption happened and the buyers are much more aggressive here than what we have in the inventory of the sell side.
Right.
Does that make sense for you? If it doesn't, that's okay.
It doesn't. Sorry.
Okay. I have to sell Apple 10,000 shares at price $100. This is $100 level. That's 55. Imagine this is 10,000 shares. I sell the 10,000 shares here. They will show up on the ask side because I was sitting and waiting for the price to reach that level. If I want to get rid of, like I got rid of AMD, I think 88, I put an order for sell at 88. My order didn't get executed till people on the bid side brought it up until aggressive buyers bid up all the way to 88. Okay. Once they came to 88, I was a seller there at 88. My orders got filled. If there was a lot more aggressive buyers there, they went through the price. That makes sense, or are you still confused? It's okay if you are.
Yeah, I don't get it. I'm sorry. Well, I also like, so where's
Well,
the
ask your
volume?
question. Maybe I'm not answering correctly.
All right, so my question is, how do you know that those 55s are sellers? I mean, that's just the price of it, right?
No. 55 is the size.
Shorty,
These are
is it
size numbers. These are size. The price would be here. There'll be a column. I'm just showing the bid traded volume and ask traded volume.
Shorty?
These are volumes.
Is it fair to say that you know what those numbers mean, whether they're sellers or buyers, how price, if it goes up, then you know they were passive sellers.
Well,
And passive sellers got absorbed.
if it gets executed right on the ask side, and let's say this number here, let me change. Let's say this number here is 560. Okay, and the price doesn't go higher. That means somebody sold 560, let's say, shares of something, and the price didn't go higher. That means that there's a strong selling, not enough aggressive buyers to break through that price. So you're looking on the ask side, depending on what time frame you're trading, guys. If you're trading 1 minute, you're gonna have to get really familiar what 1 minute large size is at the ask. Usually you're looking for the ask at some key levels, and we still find key levels. I still find them using volume profile. So like the 74.50, does anyone ring a bell on 44.74.50?
Yes. That was an SR flip.
There was an SR flip, and there was also a 3-day balance. Remember, it was 78. I said this HVN stops at 74.50. If you want to short 78, you're risking the 4 points was a dangerous, if you guys remember from watch list. And now I'll show you later when we get to live, and that might help you free. When we arrived at 74, there was some stuff happening there on the bid and the ask side, and maybe that will explain it, what happened. Okay.
So if you're gonna short it,
would you be able to show a real example, please?
Yeah,
on
well,
footprint
I go
chart.
to the PowerPoint to teach you guys terminology. If I jump in the charts and I start talking, you're going to ask me what's delta.
You said if you short at 78, why not wait for 74?
Exactly, and you'll see. Let's just get through the terminology, and then you guys will see some stuff. So delta,
Thank you, Shorty.
Sorry to disturb. Like, if you go back to the previous slide, like if you see 123 and 560 and 5 and 72, would it be like correct to say like these are like buy side imbalances?
So this is a buy side imbalance here, but since you're selling, this number showed up at resistance, right? This is a passive seller. He had a limit sell at resistance, and he hit it. He executed the order, so it'll show up on the ask side.
So if price went above that level, short, like if it's a reverse of your example, like in your example, you came up to resistance. If price went through that level, then can we assume that 560 was aggressive buyers?
It would still, yes, it can be, right? But if you see it stall back down, and then you see aggressive buy again imbalance, that means that these guys are getting eaten alive.
Okay.
That selling is gone.
Weaker.
If this 560 was there, you would not have any rejection here. Because then you look at the previous, let's say, candles, price has to go up and down. You will look at it and be like, hey, at what level did you sell off before? If this 560 doesn't flinch and doesn't reject, then these are aggressive buyers here. There's no selling yet.
Right.
And sometimes you need initiative buyers to break a level. And you need initiative sellers to break a level. And that's why this is not a magic. This is context and art. How is it in the context of the chart? Am I a resistance? Am I a support? Am I a VWAP? I don't even know what some of you guys use. Am I a Ichimoku clouds breaking? And how's the bid and ask? If I see a large ask and price is going down and I see aggressive selling imbalance, well, what do you think this was? That would have been a large sell that buyers could not go over. And sometimes it's not only one or two. What if there's a large orders in 3 sections, right here, right here, right here, at 3 price levels? That becomes a cluster, right? If you see that, then you can mark that as remember high volume nodes and volume profile. That's how they're created. When you have large orders sitting and they're executed, remember volume profile is volume at the price. So if there's a lot of volume at this price, this becomes high volume node. And when you chart, let's say volume profile, and you see a node here, let's say this was a chart, and you see this here, and 560, let's say this order right here, sells it down, and then you see, let's say, an order right here of 720 or 700, and here you had 120, right? This is the bid. This is the ask. Well, what is this? This is a large selling imbalance right off of this level, right? Now you sold off. You're most likely going to sell off.
Yeah.
Okay, so that's how you're reading it. The price goes up and it rejects at 4,500, which is 560 ask, and it
That's
goes down,
right.
and you see some new numbers pop in on the bid side.
I'm
Price is
watching
going
to
down.
see if there's any imbalances being created, right? If
Got
we
it.
drop here, if they're aggressive and they want to hop this level, right? This $100 right here. This is, I'm trying to draw $100.
Mhm.
Let's say they drop this, and instead of this, scenario here, let's say instead of this scenario, let's say you drop here, there's a little bit of sell-off. There's 50 to, like, let's say 45. And then there's, 60. There's 50 here. So a small sell-off. These are not, big sell-offs here. Let's say this is whatever, 20. So it's not selling off greatly here. And then a new candle comes in. The delta slowly switches green. And then you see, 72.15 here, right? And then you see another order come in. Let's say this is 50 and this is 450 here. And this is still happening below this price. And you see them, that's a momentum shift, right? Most likely you will watch for the break of this. And this becomes, a key point for your decision, right? You need to hop over it, and then you would look for people to show up on the buy side here. Then you would look at the bid and be like, okay, are there people buying here? If they are, then you want to see aggressiveness here. You want to see these imbalances as you break that and retest it. Does that
So
make
once
sense?
once that 450 shows up on the ask, now you're looking, price breaks that level, and that tells you if that was aggressive buyers entering.
Because we can't know. Nobody knows. If somebody tells you they know if it was a buyer or seller,
Right.
run away.
Okay.
I have no idea. I'm using context clues to know, are we bullish or bearish at that level?
Right. Okay.
And this is the only thing that we have. Okay. All right, so delta, you guys have seen, when I post a chart, you guys see the delta where it shows the delta, the max, the min, and then on the bottom, it also has the volume, right? Or top of the volume, delta, max, min. So if you think about delta, it's just the net order flow at each price. So $100 that we just talked about, right? Let's say where did this thing go? Hold on one second. So here, if you guys think about this, so if here, right, if you take the deltas that, aggressive buys here 15, and then you say take the sells, right, you take the net difference between them, that's what it is. Let's say you would get +1 delta here, right? You're looking for the net difference between the aggressive bid and aggressive ask, right? And that's what you basically get here. Does that make sense? That's your delta. That shows aggressiveness of buyers and sellers. Meaning if the green, if it's a positive number, right, in context of the time frame you're trading on, let's in the 5 minutes, and you see delta positive 550. Well, in the context, are you at support? Are you a resistance? It gives you how to play it, right? Green delta means positive numbers, means aggression from buyers. Okay. Opposite is true here. Red delta means aggression from sellers. And then there's some anomalies.
Shorty, how come sometimes you see a lot of red, but it doesn't happen until a few minutes later? In other words, where the price starts dropping.
Because they're absorbing it.
Ah, gotcha.
If there's any absorption, so usually you'll see an imbalance, right? You never want to, if you see a large imbalance, meaning let's say you see, 102 here, right? And then you see 150 and 10 here, right? These are buyers, but look at the sellers. The aggressiveness is huge. You do not want to buy this.
Yeah.
If this happens, there's tricks, right? You'll learn it. If this happens on the bottom and the price stalls, called a dual tape, right? If this happens on the bottom and then you get quick reversal here of aggressive buyers within this section, delta flips green, that's a short cover rally. These are the traps. This is called a trap right here. We'll get into it.
Okay.
So anomalies in this case are green candle with negative delta shows divergence to a downside. And it's same thing if you guys think about VPA, right? You're going up, right? And you have a candle that's this big, but your volume is this big. That's an anomaly. The footprint charts just tell you the aggressiveness of the trend. If it's up, it should be green, right? You want to see aggressive buyers as you're going up. You don't want to see sellers because that means they're selling their inventory to you.
Yeah.
A red candle with positive delta shows divergence to the upside. Usually when, let's say this is support level right here and you're kind of going down, right? And the delta, let's say it was negative 1500 here. And as you're coming here, it's negative 200 to a support. What does that tell you? It's a red candle that had minimum delta of negative 1500. Current delta is 200. This is what I look for. I'll look for this, and then I'll look for the next candle, right, to see if they defend it and if we get aggressive buyers and imbalance and drive the price higher. So that's this right here.
So Shorty, can I, as somebody who's never used order flow, would it be easier to just look at the delta instead of trying to decipher each footprint? Okay.
You don't need to, because think about it. This footprint stuff is not very complex, guys. It's actually, when you think about it, you have a candle that's like this, right? This is your candle. Footprint, all it does, it takes that candle and it breaks it and it tells you at, at $1, at $2, and $3, and $4, this is how much volume you had here. At these levels. That's all this does, guys. It's not that complex. It just tells you the levels and how much aggressive buyers and sellers you had at the level. So if the price comes back to it, especially if there's imbalances or if there's volume profile support from previous or whatever, right? Any of the setups that we played, then you would know, hey, I see what's happening. If you don't sometimes see this, there's, even on Friday, there was a level where I was like, man, I just don't feel confident shorting yet. Right, they're buying it. They were a little bit aggressive, and then they showed weakness, and I was like, okay, well, this looks like almost ready to fall, because they tipped the hand using the footprint. They showed me that if I was just looking at candlesticks, I wouldn't know that. How would I know that? Candle's going up. It looks bullish. It's trending higher, right? But yeah, footprints, I'm seeing weakness, right? I see the deltas coming in negative, right? And I see, for instance, the bid and ask, and I see the auction is completed and it's failing, right? It's failing to make higher highs. And then you get the idea, right? This comes a short period based on the footprints too. And if I'm at resistance, that adds confluence.
I'm not, my question was actually more, should we, if you're newer, would it be easier to focus first on delta?
No,
instead
not
of
at all.
trying to,
I'm telling you, it's a combo. One goes with the other.
Okay. Got it. Okay. Sorry.
Yeah. You don't, it's like you buying a left shoe on Amazon and say, I'm gonna buy the right shoe tomorrow.
Okay. We need both. Okay.
Well, if you see the bid and ask right here, and you don't see cumulative delta that summarizes this on the bottom, what do you get out of it? Then you have to figure it out yourself.
You're only getting part of the information. You need all of it.
Yeah, you're getting. I mean, it doesn't make sense. It would not be a wise choice to do one or the other, right? Could you just do delta to spot divergences based on price action? Yeah, you could do that.
Yeah, that's what I was asking. Sorry, maybe I didn't ask it.
Yeah, you can spot divergences. If you want to just look at divergences on delta, man, go for it. But you'll have to make some assumptions at what level is it happening.
Right. I mean,
you wouldn't be able to see it because this is kind of like I call it the X-ray or under the hood of candles.
You'd be guessing in a sense.
Trying
to take your probability. You'd be guessing, and you'd just be taking probabilities, hoping that it would do what it's supposed to do.
Yep.
Gotcha.
Yep. Okay. So this is an example I was giving you, like of a hidden divergence, right? Price trending down in 15 minutes. First closed bar has minimum delta of 4,500. Bar closed with delta of 400 at support. That would mean that there was a lot of buyers that drove from negative 4,500 to negative 400, right? That's really aggressive absorption. Does that make sense? Can you guys visualize this?
Yeah.
Anyone else? Free? Does it click?
It's essentially like saying they're bringing the price back to balance.
Basically, yeah. The buyers are finding value at the level that you're in, and they're buying it.
Right. It's saying like the first candle there was so much selling where there's a negative 45.54 and all that selling got absorbed and the next candle is still at minus 400 and the prices are around the same area.
Correct.
So everything's being all the selling is being absorbed.
That's exactly what absorption is.
Okay.
Does this make sense to everyone? The delta?
Yeah.
This has nothing. Let me reiterate. This has nothing to do with the options delta. Do not confuse option pricing delta in the Greeks to delta here. Delta means change, right? The variance. So it's ask volume minus the bid volume. That's what delta is. Does that make sense? Do not confuse the two. It has nothing to do with the one or the other.
Yeah, an option, it's the delta is the change in the price of your option based off the 1 point move.
Exactly. Yeah. Do not think of it that way. Okay. Any questions here? If you're confused, this is your time to raise your hands and ask questions. Otherwise, you'll be confused. Okay. Next step in delta. So this is the kind of the variations of delta that you guys will see on my charts, right? The delta, that's usually usually I show volume. I should have put them in the order. Total number of contracts executed at price, right? On each candle, let's say 5 minutes, I'll see the volume. That's how much volume occurred on 5 minutes. Delta, this just shows the difference, traded volume between buyers and sellers, right? Delta tells you who's kind of more aggressive, right? If we're going up and you see positive delta, right? And you know, it does the little color coding like bright green and a little less green or neutral with no color. That tells you like how aggressive the buyers or sellers are, you know. And then the max delta and the min delta, you can use a lot of ways. If you're approaching resistance and max delta was, you know, let's say 2200 green, and as you hit the resistance, the delta is positive 200. What does that tell you?
As you're approaching
The buyers are getting absorbed. There's a lot of aggressive selling happening at that level. So somebody's eager to get rid of their peanut butter. Somebody doesn't want their inventory at this level, so they look to sell it. Does that make sense? So max and min delta can be used. I use them to spotting hidden divergences. Does that make sense? Can everybody at least visualize it or not yet?
Not a Shadi. Can you
No, I
repeat
can't.
that?
Yep. So if, let's say we're going up in the support, and we'll cover live, right, on a couple of charts. Where did this thing go? Okay. It's messing. I don't know what's going on with the PowerPoint. Okay. It just goes away. All right. Well, if you're approaching a level, let's say this is resistance here, right? And on the bottom section, you would have the 4 levels, right? You would pay attention to the volume, which would be the first one. Then you would have the max. You would have the delta. Then you would have the max and then the min. I would put N here for min. Okay. If the volume, let's say, is, you know, going up, right? And then the max delta was 1500 green. As you're approaching, the candle has not closed, right? The max delta is 1500 positive, which is big, let's say 5 minutes. Then the delta, as you're closing, let's say it comes back to 200 positive only. What happened here as you're going up to the support? Oh, I'm sorry, resistance.
That means buying got absorbed.
The buying got absorbed with heavy selling. Because remember, +1 means aggressive buyer, -1 means aggressive seller. So if I took away 1,300 from you, that means somebody had a lot of selling to do, aggressive selling to do. Does that make sense?
Yeah.
Okay.
So when you
And
say
then-
so when you say hidden divergence, pairing the max or the min, the end result delta, the final delta.
Exactly. That's what I use, right? I look at the max and the min, and I look where's the delta, right? Where's the current delta on that candle?
Okay.
Right. So if you're falling down, let's say that the min delta was same concept, right? If it was 2,000, let's say just 2K here. If it was 2K, and if you're coming up here, right, the delta flips to 200. That's a rather large swing, right? 2,200 point swing on delta. You support here, and then the buying happens, and they're absorbing it, and then you usually expect this. Does that make sense?
Yeah.
We'll cover
Thanks
some
for
live
that.
examples as well.
Thank you.
Okay. All right. High volume areas, just I would say, high volume areas are your HVNs on volume profile, and I can't make it simpler than that. If you think about volume profile, right, we usually, I think it's gonna play with me now again. Okay, high volume areas, if you guys think about it, on volume profile, you would have something like this, right? And usually this would be your POC, right? POC itself is a high volume node, but then in between, you might have a high volume node here. And what that would mean in terms of bid and ask is that you had a lot of volume traded here. Irrelevant if it's buy side or bid, sell side, it's just there's a lot of volume. There's a lot of interested parties at this price. And there was a live auction, there was a lot of contracts exchanged. So this becomes what? What would you treat the high volume node from volume profile as? If the price is right here, and this is your high volume node, what is this right here?
Resistance.
It's gonna be your resistance. If remember the double distribution date when you have a B shape like this, and you have a high volume node here, and you have a high volume node on the bottom, right? If you're able to break through this high volume node, that becomes your support, right? Now you flipped, right? And you would look at the time and kind of combine the two ideas and see if it supports it. So any more clarification needed in the high volume areas? Is basically a lot of volume traded at the price. Any questions? No? Okay. All right, imbalances. So in footprint charts, we set up imbalances as stacked zones. Stacked zones, usually you can set it up any way you want. I look for 3 imbalances to create a zone. Does that make sense? So I would have, and I'll show you guys like visually what it means like, but I would have, let's say it's 3-to-1 imbalance, and I have 3 in a row on the 3 different price levels. I see buyers or sellers selling or buying aggressively. Okay. And I look for that. And I typically look 3-to-1, right? Somebody brought up Trader Dale earlier that he does 3-to-1. The standard is 3-to-1. If you're looking for 2-to-1, if the market's bracketed and they're really tight, then you might switch 2-to-1 and look for those, right? When market has these drastic V-shaped recoveries and whatnot, you'll catch a few. We had a few on Friday, I think, burnt a dumpster. I think we had 2. We had 53 and we had 41 on ES, I believe it was 53 and 41. Maybe I'm flipping within Q levels, but there was a couple of them that showed up on Friday, right? And we traded them, right? The rule is that never counter trade the imbalance. If you see an imbalance happening, do not counter trade that until that imbalance is taken over. Meaning, if you had a steep sell-off, right? This is gonna play with me again. I just don't know why it goes away. So if you had a steep sell-off like this, right, and then there were some imbalances, let's say 3 stacked imbalances here, how would you trade it?
You short the retest of that zone?
Yeah, as they come here, you would take that short.
Okay.
So this becomes your imbalance, right? And a lot of times, you know, and I'm adding something so you guys understand it. And I don't care what you guys use. I'm here to give you what I have, what I use, and you combine whatever you use. Let's say that this was, some of you guys use the ICT model, right? So if this was a selling, let's say, candle here, right? And this is, you know, they call this the fair value gap, right? And there's just different names for stuff. So if this is the fair value gap, this candlestick itself alone does not know where the imbalance happened, does it? You're assuming it happened here and here, correct? What the footprint does, it tells us exactly what happened.
Okay.
So it tells you that there's the imbalance happened here. There was a lot of sellers on the bid side, right? It would look like a bunch of large numbers on this side with smaller numbers or zeros on this side. And that's what they call a fair value gap. I mean, there's, you know, since technology and social media came, everybody added names of strategies and names of stuff that works. And it's okay. It's just that you got to learn a whole lot of new terminology when it's basically just called an imbalance, right? Market's imbalance or an imbalance. And that's just a candle imbalance.
And imbalance just means price moved through that area so quickly that there's still people that want to sell peanut butter at that price. So
Correct.
if it comes back there, they're likely to be filled.
That's correct. There's still inventory there.
Okay.
Right. And there usually when there are zero buyers at that price and you're selling, you know, aggressively, that's, you know, it's going to be revisited most of the time. Okay. This is, if you get anything out of this slide, get this. Do not trade. Do not think you know the market is going to bounce at this level when you see a large imbalance, especially 3 in a row, stacked imbalances. Okay. If you're looking at the histogram, right? If you're looking at the price, right, as the imbalance is happening, make sure that the volume is also increasing. If there's a spike imbalance to the downside and volume is less, what do you think that is? If you're at support.
Getting weaker.
Okay, but what do you think they're doing?
Sorry, can you ask that again?
Absorbing selling.
Absorbing the orders.
Absorption.
Okay. If we're at support and there's an imbalance that happens, right? But the volume doesn't increase on that imbalance from candle to candle. What do you think that is?
A short covering.
They're doing a low volume test of some sort?
Called a trap.
Failed auction.
Trap, yeah. Yeah.
It's called a trap. That means somebody, a late person came in and tried to market sell to, you know, how many times have you guys looked at a chart? I'll bring up the chart right now just so you guys can.
Yep.
Okay, let's go on 5 minutes here. How many times you guys looked at a chart and this is the top right here? Here we go. Let's say this one right here.
Mhm.
And you're like, man, I'm gonna buy this on the breakout.
Yep.
And look what they do, right? And here's a prime example. They trapped here, right? They trapped some people, they got stopped out, right? And then once they took that away, they're like, okay, well, we're going, right? And then they broke higher. So here, what they can do, right? If you think about the bottom now, right? If this is my support, right? You see here, this was the support. Look what they did here. Somebody tried to market sell here to, oh, we broke this, and then they added market sells to catch in, to not miss the move. Correct? And what happens is that those on less volume, and look at the volume here. I mean, it doesn't take science, right, to figure it out. You come here, you see a wick showing up, and these people, and look at the volume here. It's not really increasing on the break. And with the footprints, you'd be able to tell actually number of the contrary. You can here as well if you change it. But you would see the number of volumes and that, you know, they didn't really increase on that sell-off. When you're going through major support resistance, you need initiations, right? You need somebody to initiate the buying and selling. I personally do not like to be in a price discovery mode myself. Like, I do not like to be the first one that bids on the market to break a level. Because my 2 contracts or 1 contract, they don't do much. They do 0. Unless I'm with the majority, then it does something, right? But I'd rather play some sort of retest than play, like what most people do is breakout strategies. Does that ring a bell now, V?
Yes.
Yeah.
Okay. Okay, so I think we covered this. This is fairly simple high volume. It's just you're gonna base this on the candle that you're on. Okay. Let's see. Imbalances. So we covered this. Any questions on this? These happen on the buy side and the sell side. Okay. This goes into setting up. I'm just gonna go kind of forget about this for a second. You guys we can do it again. I'll show you guys live instead of showing you this, but I left this as a reference so you guys at least know what to click, right? Let's see. So here's the imbalance, right? We just talked about imbalance. Can you guys see these numbers or is it too small?
A little small.
It's too small.
Okay, well, we'll go live. Basically what happens if you look at these yellow numbers right here, you see it's basically aggressive buyers stepping in, right? They stepped in, there's 200 above ask, 2 sell, 49 and 7, 65 and 0, and 44 and 0. So this has 4 stacked, price levels imbalance. And as you come to that level, it's natural that people will come in and they will go long. And you see here, as you're approaching this level, the contract size, the number of contracts here is kind of dropping, right? From 11.4 to 10.6. Delta is strong negative 600 on this time frame on 15 minutes. And then you see what on Delta, right? It goes from 683 negative to 206 positive. I'm sorry, negative 206. So there's an absorption happening at this moment. And then you see here, a number of contracts on this buy. Is it good between these 2 levels?
No, it's going down.
And then a green delta, but what happens to volume?
It goes down even more.
That goes down even more. So what you want to do is here, do you go long here when this happens? Yeah, of course, you can catch some points here, right? If you got it here at 15-ish, I mean, catching, 20 points on a bounce is considered success. But at the same time, you have to know the context of what happened above, right? Up to where do you take this, right? You just don't take it and forget about it. You have to know where to exit, right? So you don't catch one of these guys. Does that make sense? So,
Yep.
you have to look at the footprints is not one candle. You look at it and you forget about it. You have to look at what happened above. Was there any imbalances on the sell side, right? Was there any auctions that didn't complete? And from that, you will conclude, my entries here, my exits here, and I'm out. But the imbalance is basically on buy side imbalances. You can color code these. We'll cover the settings. You can color code these to be any color you want on the ask side here. That's usually, a good setup for a long. If these were on the red side, right, and I just had a hard time finding them after hours to go back, most of them got fixed. If there was these numbers on the sell side, you'd be able to see it you would have a red stacked bar and that would be assigned to sell as you revisit it. Okay, so here's an example. Is this small still or you guys can see it? I don't know how it looks for you guys.
I can see it if I zoom in. I can see it.
Okay, I just can't make them bigger than what they are right now. So absorption of footprint charts, we have 2 types of absorption, right? You're going to have the absorption of buyers and absorption of sellers. So buyers occurs when aggressive market buyers hit passive sellers. So this is where I think it can make sense, right? If you're buying aggressively and then you see some large sell orders come in, like here you see 8,400 come in, you had 6,300 come in. There's some large numbers coming in here, right? And the price is failing really to aggressively make an imbalance or higher, but there's aggressive selling right at the top. Some buyer imbalance here, but then you see, even if you're to grab volume profile of this cluster here, you would know where the cumulative POC is. And I would say anything below this level right here, which is, 2633 buy side, if you're able to break below that with the complete auction being right here, there's a high chance you could potentially sell off. And then you
Good.
look at the delta and the volume, right? That's what I do. So you look at the volume here, 67,000 contracts at 12:30 on this candle right here. Then comes here and it's 30,000. So half the volume, and delta did what?
Drop.
It went from
Went
6
negative.
to negative 1100. The next candle here, again, volume is low. If we want to break a level, you will need what?
High volume.
You need a little more volume here. This candle needs volume, and look at the volatility on this candle versus this candle. Right? Not a lot of volatility here, and the volume is dropping. And then you make a higher high here, right? But look at the volume. You go from positive delta to negative, right? And the volume is being absorbed here. Then you pick up in volume and you pick up in delta and negative. And look what they did. They sliced through that level. They sliced through the last order and completed auction here. And then they came back for the retest. And guess what level that was, guys? I don't know if you can see it, but that's the 74.5.
74.
And if you think about it, I'm just gonna go back and forth so you guys can understand this.
Yeah.
If we go on, let's go.
Ignore a cumulative delta or only look at the bar delta.
Say it again.
Do you need to should we ignore the cumulative delta? Because I've seen market has been going up when there is negative cumulative delta. You are looking at bar delta, right?
I'm doing net delta here. This is delta, the difference between buys and sells. Cumulative delta would look different. These numbers would be huge on delta. Cumulative delta adds, let's say I add cumulative delta starting here. It would tell me it's 1500 minus 200 plus 200. It would keep a running total of delta. I don't treat
this net delta is per bar.
The net delta per bar, correct?
Okay.
Yeah, I don't use what I wrote here. If you remember, right here, you can use cumulative delta. Do I turn it on sometimes to see? Yeah. But cumulative delta based on, if you look at it longer time frames, it'll tell you, if you're up 10, 15,000 and you see a drop, you'll be able to notice the delta is shifting, right? And you don't want to short when delta goes from positive to negative, because that's where most likely is the support too. On cumulative delta, I wouldn't do that, right? So I don't use cumulative that much. I just turn it on, I would say occasionally. Okay. Let me show you the same thing we covered in the watch list is what I'm going to do right now. You guys remember we said this was the Friday POC, then we had the 2 half days. Do you guys recall that conversation?
Yes.
Okay, so then what I did, if you guys remember, I drew these levels, right? I had cumulative value area low, which was like 78 or 79. And then I'll just hide this for a second. And we said that there's a little bit of volume node here. Do you guys remember this? There's a little bit of volume node here that really drops off after that. And we said if it can break the 74.50, it was something like that, like right here. If it can break that, it might not be a bad idea to short. Okay, well, we knew, the 2 days of, I guess, no volume right here. If you look, there's really no volume here. And then, once you break this level, once you come back to it, it's going to be a fight. And this is the level where, I'm watching on the footprint, what I was showing you guys here. Let's see. This is what I was showing you here. This is exactly what I'm showing you here. It's the 74 level. At that time, what happened? You come in with positive delta, and at the top, you're starting to get delta, and you're getting volume increase. 30,000, 35, 37, and look at delta, negative 500, negative 900, negative 2100. And this was basically your warning sign right here. As soon as you approached here, and if you look at some, sell side candles, right? If you look at some volume, look at the volume picking up here, 3,700 sell. These are sell orders right here. These are limit sells. They're selling this pretty aggressively right here. some buyers tried to step in here and buy it, right? And then you see that they held that level, and then look at the aggression as they're coming to that level of support. You guys see it? 27 to 247, the aggressive buyers came in here, then they sliced through that level. They sliced through the low of this candle, and they had a decent imbalance, 2400 to 1300. And then on the next candle, they also had a decent imbalance. And the POCs here, which is also pretty much the high of this completed auction here on this candle. So once you're slicing through this level right here, this is a safe short, which was 70. And then you see a lot of aggression coming in here. And, you know, when you're seeing aggressive sellers like this, you don't want to be necessarily a buyer immediately there. Most likely it'll play out. And then you see here, is there an imbalance? Two imbalances right here on the buy side? You guys see it? So this becomes almost like a high volume node, right? So if you come here and you just circle this, you'll see that it's going to bounce off of this level right here. Because there was an imbalance here, and then they basically held it. Okay. Does this make sense?
Makes sense. It might take a little bit longer to, you know, to grasp it, but it makes sense. Yeah.
Shorty, question for that that you were just pointing out, with the second one from the left.
Yep.
With the
4971.
Yeah, that area right there. So the 4971, that is on the ask side. So that would be like sell, like a limit sell that got executed.
No, this is not a limit sell here. This is not
So
a
that's
limit sell. From this
Aggressive
point, what did
seller?
the price do?
I'm sorry.
After this, where did the price go?
It went up.
Yeah. So,
Aggressive buyers.
so you have a stacked two balances here. You have the buyers. Then you came here, you know, and you see some sellers right here. And still, you see the ratio here is more on the sell side, right? If there was buyers here, there's a lot of sell side aggressive sellers here. So this, you know, you pay attention to it as you're going up to large numbers. Here's another imbalance, right? 22 to 46. And that became your POC for this candle. There's a lot of volume at this candle. And then you go up and look, they're selling here. This is not going higher, and look at this imbalance right here.
Do you use 15 minutes chart or 5 minutes for the footprint?
Say it again.
Do you use the 5 minutes footprint chart or 15 minutes?
I use 30 minutes as a default to look at the day, and then I have a 5-minute chart.
Okay.
So I use 30, and then on a bigger picture, if I'm trying to find where are we on a bigger scale, I go to daily or 4 hours.
Shorty, question for you then. Does the sell side or buy side, does the sell side and buy side of the candle flip depending on whether or not it's a green or red candle?
Well, it would. I mean, it should, unless there's divergences, right? It should, but that's not an absolute answer.
Okay, because I'm just like used to at level 2 and just being used to like bid side on the left and ask side on the right. So it's kind of my mind around how the footprint chart works and how it kind of flips depending on what the candle is doing.
Well, I mean, you don't even have to see the candles. This is the candles for me. This is the low. This is the high. This is the POC. This is the candle here, right?
Mm.
In this chart itself, it's difficult to say the open and the close, but if you do like an individual or a double, you can see because it shows you little dots on the sides, and you can tell where open, close, high and low, the whole OHLC cycle. Okay.
What are the yellow highlighted numbers? Is that the POC?
I'm sorry. Yeah, these are the POCs of each individual candle. So remember on daily sessions on volume profile, right? So if I go to the volume profile, for instance, right? And I just remove the drawings. For each day here, right? Each one of these is a day, there's a POC. Well, for each candle right here, I'm looking at POC of each candle. The yellow highlights where the most volume happened on that candle. Does that
All
make
the way
sense?
to the left. Why does the it makes sense, thank you. That huge green like wick, there's no numbers on there, but I noticed like on the red wicks it has numbers. Can you explain that?
Well, there was either, so let me go back. Where are you? I'm having, well, a little bit of trouble here. So here, usually if there was a buying, and this is at 12:15, if you look at it, there was usually either buying or selling, depending if this candle did close or open like that. So let's look at it. This is 12:15. Let's go 12. There's the buying, right? So this is the buying that happened here. So it's basically empty space here.
Oh, okay, so that indicates like those
So usually
empty belly spaces.
Those are the belly spaces where I call it the alien trading, where it just comes in and you have an imbalance and it happens here, and really not much documented at that point in terms of candles. They had imbalance, they popped, and then you see they quickly came back to fix it.
So you would see like a 1.
Usually, on those type, you should have some sort of volume, but it also depends on the tick size and what you're doing to see it, right? On mine, I think tick size is 1, meaning the how many orders are in there to catch it. Okay. Unfinished, this is important that you guys understand, right? So if you look at unfinished buy auctions, which usually happen at the top, if there's no zeros, somebody please go mute. All right.
Yeah, can somebody please shut that mic off? Thank you.
It's Vandalay or something.
Okay. So unfinished buy auctions, you see here on the top, they're still playing, right? There's a bid and an ask. There's a bid and an ask. That means it's not finished yet. Something's happening here. They're willing to trade here. When you get a 0 at the bid, and there's one has a 0 usually on the bid side, and the ask side still there, that means the auction completed. There's no more interested parties right here.
Okay.
On all 3 candles, right? If you even now add the delta, on all candles was negative, more aggressive selling. Volume at ask is what? Look at the volume at ask here. You had 202, 183, and then on this candle you have 128.
1,083 and 128.
So on this here, it's a net decrease at the ask, and then here you closed it.
So it went from low to high to low.
Very low. Yeah, to almost half here. And then when you see a 0, that means it's a finished auction. We completed, no more business there, no more parties willing to play at that level. So if there's no buying at this level and selling is persistent, where do we have to go with the price to find buyers?
Higher, right?
No, you have to go lower.
Think about it, Cuban. If you're not willing to buy shoes at 100, what are you gonna do?
Yes.
Most likely you're gonna look for a bargain, look for a price where you can get it cheaper. But a seller, if he sees that there's no, remember, there's a view of a seller and a buyer. If you're selling peanut butter and you don't see demand, what are you gonna do to your peanut butter?
Drop it. If you don't,
you're a seller, Cuban. You have peanut butter. You're selling, but there's no people willing to buy it at that level. What are you gonna do?
Got to meet them in the middle, or just remove yourself completely.
Remove the orders, or you're gonna drop the price if you have to get rid of it.
Yeah, negotiate and then see if they buy it higher. If not, then you drop the price.
You have to lower the price to find demand. Price discovery is used. If there's no buyers at a level, then you got to drop the price to find buyers.
You got to drop the price. Yeah.
Okay. Same thing.
Is it safe to say when you see 0, like to short?
No, that does not mean safe to short. You would still, this is not a candle where you look at 0 and you short immediately. It just means the auction completed, right? What if the buyers, if you did not see this imbalance on sell side, but let's say a strong imbalance happened here on the buy side here, and then the delta flipped, you'll be in trouble shorting that. It's the context that you guys are
Okay, I got
missing.
it.
You want to base something off of one decision or one candle, you cannot.
So, Shorty, do you call that, and you would call that an imbalance, right?
There's individual imbalances here. The red number indicates sell side aggression.
Okay.
And you see here, there's a buy side aggression at this level, and we broke that level as well. And there's
Yeah.
still sell side, much more aggressiveness on sell side between the numbers. 1450, 2000, 1630, 1325 to 1100. And
And the
here they,
delta,
they showed up some buyers, but then they continued again selling.
and the delta confirms that because it's negative
You
3,000 something, right?
almost 8 times the delta here, 7 times the delta here
So
increase
that
on the sell
confirms
side.
it.
Exactly.
Okay. So that's what you want to see, the confirmation.
You use the delta to tell you if the move is agreeing or not agreeing. In this case, it was definitely agreeing. Negative 3,000 is pretty
Yeah,
good on
pretty
15
good number.
minutes.
Okay, good.
Okay.
We'll get it. It's just
Same thing on the unfinished, right? So sale is really not finished till we see zero on the ask and a big imbalance that follows, immediately after you can buy. Somebody asks, can you buy immediately if you see a zero? No, but you want to see if you see an auction that stopped, right? And that means we're not willing to go lower. It stopped in the track. Well, take a look at this chart itself. I guess I can make it a little bit bigger.
And it will always go to zero.
If it's complete auction. Yeah. Always.
Complete auction. Okay.
Sale auction, I'll have a
Shorty,
zero ask.
is that a typo in this slide while you're there? Ask and bid or ask and big? In this slide that you're, please, thank you.
So once it goes to zero, then you want to wait for the price discovery.
Well, you want to see aggression at some point. Once auction completes, you want to see aggression in the way you're looking to go. If this was support, right? I don't know at the level, but I'm telling you here, if I'm looking a sell-off of, this is probably, sometimes before market hours or right at open, a big dump, and then you see the open, let's say it's negative 200, negative 19, and you're coming to support when you dropped, almost 3 to 1. Number of volumes stayed the same, but the delta stopped. So that's telling you there's an absorption happening, and this is a failed auction here. So they're most likely going to resolve that, right? And what did they do?
Go higher or
they resolved this auction. They came back and they completed the auction. Then you're dropping. You made a lower low here, but the delta went from negative 5,000 to negative 250.
Yeah.
Then you see an aggressive buyer come in at 2,500 to 458, which is indicating, hey, we stopped the auction lower, and this would be equivalent to what in volume profile? You have it on your orbit indicator. Stopping volume?
Yeah, stopping volume.
You're coming to a stop, the delta is confirming this, and you're looking now to see, is this stopping volume good? If the stopping volume is good, you should see aggression. And here you see an aggression, right? It's leading between this one and this one, this one and this one. And here you see aggression, right? So there is some buying that's occurring here.
And
if you
in
catch
order
this,
for it's in they have to, in order for it to go higher, it has to break that level there.
that's correct. Yeah. You want it to break, and then you're always pay attention to the candle POCs, because those are the POCs of the time frame candle you're on. I wouldn't use anything below 5 minutes if I was you guys, but guys like it, use 1 or 3 minutes.
That yellow line.
That's what I have. That's correct. They're POCs.
Gotcha. Yeah.
Okay.
Yeah, this is gonna work out well.
Okay, so I did some trade examples here just so you guys have a reference, so you can at least see it. any critical point, whether it's support or resistance, is gonna be the magnet for volume to come in, right? They're gonna try to dispute and figure out which way they go off of that level. So now if you look at, for instance, this example here, I don't know if this is visible. This is, I just enabled on the Quant Tower monthly VWAP. So monthly VWAP in this case would be what, like 7 days or so, since we're in the beginning of the July. It's here, right? And you see something happening here. Does anyone see it? Pay attention to here.
Shifting down.
We went up, right? We broke the, VWAP here. There's a lot of buyers here. They come in 5,000, some selling here, but then you see, they break through this level and you come to the level right here. You see first a lot of selling at the top. Look at the ask here. 18,000, right? There was a limit seller over there, then he executed. He hit the sells. Then you're coming back to the VWAP, and what do you see here?
The POC is right there as a candle.
Do you see, for instance, you saw 18,000 sell limit order. Do you see any limit order sitting here for buy similar quantity?
I can't really see it, but
I mean, it's 650, 3,100, and then here's 11,000 here, matched with 10, well, matched with 5 here.
It's still less than the other one.
It's still a lot less. It's almost half as less as it was here, right? And then you look at the delta, it was positive 9,000 here. The delta contracts, number of contracts went down a little bit, and the delta flipped negative. Then this is, if you think about it, this is your POC. The white here is your POC of this candle. Now, if you just draw, for instance, I don't know why this thing just hates me.
Yeah, if you draw your, let's say or turn on your SVP, you're gonna see the.
So look, if you go look here, and if this is the POC of this candle, now pay attention to it. They came back here, and what do you see on this right here as you break this POC? Can you guys see it?
Wow, huge imbalance.
There's an imbalance in selling as you're breaking this POC. This is aggressive sellers as they're coming here. They break below that and they come back. And what did they do here? Pay attention to this.
Sell off.
There's another large seller right at that POC right now. Right? And then you're coming back to the VWAP and you're looking to see, is there any buyers sitting here? So there is buyers that are coming in here. There's, a nice, decent imbalance, right? Not a lot of limit orders. That seems that there's probably short-term buyers sitting here, right?
Yeah.
They got in and they're hitting this market buy here. If you're a VWAP trader, what do you do when it touches VWAP?
Go higher.
They buy. So there's a lot of people that bought here, but then there's not a lot of follow through on that next candles. Right? There's not a lot of follow through. You see a massive seller right here coming right above that level. And then you see, once you broke this, pay attention to this volume here.
Yeah. And then
there's an imbalance, 8,000, 4,000. Then there's another buyer trying to come in here. And look at this now. What do you get shortly after that? Is there 3 red numbers here?
Yeah.
Stacked
imbalance.
Stacked imbalance.
Look at the
Nice.
delta at the bottom.
Exactly. And look at, that's the second point. Look at this, but more importantly, what did I say has to happen if you want to break a key level?
Volume.
Pay attention to this volume.
Yeah.
This is 300% increase in volume. And you have this imbalance here. You do not, I just repeat, you do not buy here. Do not ever. You will deplete every account you have in your house and your family if you start buying and trying to catch the bottoms of these.
Hey,
You will
Shorty,
never
just to
be long here.
practically speaking, though, we don't see the volume delta until that candle closes, right? So based
You will
on this,
see it
you're just looking
increase
at
here.
that stacked imbalance.
You would
Okay.
see this coming up. You would see this. This is 1 hour. You would definitely see this on 5 and 10 minutes pop.
Yeah.
Okay.
So you say don't buy where?
When you see
At
an
the break?
imbalance like this, you don't want to be, even if you see a small bounce here,
Mm-hmm.
right? Even if you see like let's say a buy side imbalance right here, you do not buy that. Where would you
Right.
buy a stacked imbalance?
Once it goes above it.
It needs to go above it, guys. It needs to do this. And what would that mean in terms of buyers and sellers?
Those sellers were absorbed, and now they have to buy to cover.
Exactly. That's the concept of this. I do not want to buy here. I'm only willing to buy once you do your job and you get it above. And then, guys, I'm shorty. I do not trade 15,000 contract. I cannot move a needle. Neither can you. You want to go with the big boys, not pretend you're a big boy.
Yeah, let them explore the higher. Let them
Exactly.
explore.
And then even here, if the price
Yeah.
comes back, your first instinct here is to short.
Right.
Yeah.
I wouldn't trade this on 1 hour. If I'm looking for an entry, I'd probably go on 15 or 5 minutes, usually 5 minutes on the cluster chart. I would go and I would look, what's the behavior? How are you doing here? If I see that you trapped some longs here, you pop and there's no follow through, and I see, let's say, an aggressive sell cut, come, I can hop in short and that'd be good. If I lose it, then so what? They trap me on the short side, they go higher and I get stopped out. And you're playing probabilities. You're not playing, predictions of your ideas what the market should do. Market does not give a damn what you think it should do. It's gonna do based on the market auction, right? Where the stronger buyers or sellers are.
Yep.
So, Shorty, are you identifying the imbalances on a higher time frame chart and then go to
I
a
do,
lower
yes. So I would go through the charts. I pretty much look at, from 5 minutes. I look at 30. Lately I've been started looking at stuff at 10 minutes just because it's I don't know, odd number.
It's
And I've
cleaner,
been, I've been seeing more stacked imbalances on 10 minutes.
Yeah, I look at 15, also 10.
So
15.
I will, like, when I prepare, when I look at it at night, I'll go. Usually I start right. If you go, I'll show you guys on the weekly. You'll see, a bunch of stuff that might not mean much for you as an intraday, but you might mark a zone of a high volume node off of a weekly.
Mm-hmm.
Right? If I see a high volume node on, for instance, on the weekly, if this thing shows up, I don't know. I would highlight. Let's say this is a weekly chart. I will highlight that high volume node here, right? If this was it right here, I would highlight that high volume node and be like, okay, well, this is an important level. There's a POC inside of it, so I would know, where's the heart and the high probability bounce. Especially if this was, let's say this was 2 imbalances here sitting, then I'd be like, okay, this is high potential for a bounce zone. As we approach that, I would probably switch to 5 minutes or 10 minutes and look at how's the action responding. How's the delta looking, right? Are we absorbing? Are we selling? Is there a divergence? And I would look to play that. Does that make sense? So I do look at different time frames. I start usually with weekly and I just look at high volume nodes and I see if there's a POC. Then I go to 4 hours. I look at 1 hour, 30 minutes, 15, 10, 5. And I would just notice if all of my time frames have a similar levels and concept where I can go with a trade. And me personally, this, I combine, where the hell is it? Okay, I don't know where. I combine what we do with volume profile with kind of with the footprints, right? So if I was to look at this, for instance, and I find the trend, right? So here's the trend right now. You're just consolidating, guys. I know this looks like, oh, we had a big sell-off. This is nothing but, just a typical consolidation after a run-up. You're running here, and you can even, if you want to call this right here, the support, right? You hit the top. You're still somewhere in the middle of this, right? You're not really far off. Right? Where are you? You're right at the middle of this consolidation. So you're consolidating. We haven't broken the consolidation yet. And it's the same thing that happened here, right? If you guys think about it, this is your consolidation here and you're consolidating and you broke and now you're building. Either you're going to go up or down. Who knows? Nobody knows. Nobody knows if we're going to go higher or not, but we're playing in between. If you're coming to this support level, this would be a really interesting level to look at footprint as we approach this, right? Are we seeing initiative selling? Are we seeing aggressive delta and a negative? Or are you seeing a divergence or positive delta flipping here? That's how I look at Delta. I want to see the inside. What are you doing? Are you really selling here, or you're preparing to buy here?
Yeah.
And that's how useful and how most traders use footprints.
So it's like you're using the volume profile to come up with your key levels, and then you're watching the order flow to see if
Exactly.
what you think will happen is happening.
Exactly. Do I go long or do I short? Remember our accumulation setups, right? So if I go on, let's say I go on 15 minutes, right? And I'm looking at this as a buy, right? We go from here, POC is going to be here. Okay, well, here's our POC. So now I would look at this 44.20 as we're coming up. This should be a level where we go long.
Yeah.
As you're coming to it, I think I traded live when this happened. You know, things lined up to go long.
Yeah.
And I confirmed it, footprint flipped, and I said absorption is just crazy. The delta pumped really, really hard, and they bounced it to a penny. At that time, it was 19 and a half.
Yep.
And it popped. So I look at the key levels on volume, and then I correlate that on live action to footprints to see how are they behaving at those levels. And it's almost like, you just simplify it.
You look at different time frames so you can
exactly
look at
use that, but then simplify it to yourself.
Yeah.
Footprint doesn't tell you nothing more, but that for each candle, let's say on 10 minutes, it just tells me where are the buyers and sellers here, and was it real selling?
Yeah, breaks it down
By
for you.
using delta, is it real or not? And now if I a lot of times I can tell what's happening here just using on candles, right? And you guys probably can too, using absorption candles and volume, right? A lot of times you can find a decent setup using same strategy by using candlesticks, but it takes more practice and training your eye to notice that, I would say. If you look at this right here, where's your stopping volume here? Does anyone see it?
$44.20.
A little before it's
Which
At the
candle was it?
bottom there, at the bottom.
Second green candle.
Second to last red. I don't know.
It'll be this one.
Yeah, right there.
So this is your candle, right? So if once you break the high and low of this candle, then you can probably go long. And if you look at it, does it respect this level at all? It tends to respect it.
Oh, yeah.
You can come to a same conclusion, guys, multiple ways. I can use VPA from Anna Cooling and her analysis. I can use footprints, right? I can confirm multiple ways. It's your choice and your preference. If you believe in this and you become confident in what you're seeing and you back test it and it works, yeah, why not? Look at this candle right here. So you're going up, right? You're seeing some volume. You see a big candle, big volume. Is there an anomaly here?
No.
There's no anomaly here, guys. On 10 minutes, there's no anomaly. Small candle, small volume. Is there an anomaly here?
No.
No. Is there an anomaly here? A little bit.
A little bit, yeah.
Bigger candle, smaller volume. There's an anomaly on this candle, right? There's something going on here. Then you see, in 10 minutes, I don't see much, whether maybe this is stopping volume, but I don't consider it, right? I want to see something like this, but I want to see a volume a little bit bigger here. So if you go on different time frames, you might not even find a true stopping volume candle. If you look at on 5 minutes, here's now 5 minutes. Where's your stopping volume here?
$44.64.
Pay attention to this candle. All right, you look at this candle, and it relates to, this volume. So this smaller candle, smaller body, had a bigger candle here, and then here you're coming back here, and then just pay attention. Are you breaking the top here or not with the increase in volume?
No.
No.
No, you're not. And then the next candle comes in, a few candles. Let's say this is the low. What happens here with volume then?
Volume increases.
And it goes down. Price goes down.
Price went down. So what does this tell you about this candle? In terms of footprints, what should you
Stopping
see on
volume.
delta here?
Should see a small positive delta or a negative delta.
Or a shift from min delta to current delta to be from negative to positive.
Right.
Yeah. Yeah.
Exactly right. So I'm not telling you footprints is you have to use it. I don't have to use them. I can use candles and studying of this to see it. I'm just giving you guys a weapon that you can see behind on the candlesticks. It's not a must. It's just a tool that you can use. Here's another one. Look at this. You're dumping at, don't pay attention too much to the last 15, 20 minutes of volume. But here, you come here and you see the selling's picking up, but what are you seeing from candles? Look at this. You're picking up, but the candles are getting smaller.
Getting smaller, yeah.
This is a typical absorption in the volume anomaly.
Yeah.
So now, let's say, I don't know, tomorrow, if you're trading just naked, we need to hop over this level. And there was an imbalance at 441. I know for a fact it was there. Right? So that's how you can use this, right? I mean, no reason to complicate it, right? So this is the same example from the resistance where kind of break down just to look at the sell side. As you approach resistance, you expect to see the ask get inflated. You want to see orders come in on the limit side and get executed. And if the price is not breaking above that level, there's a chance that that guy was a strong seller, maybe a big order, and he's absorbing all the buys, and he's just going to sell anytime you come to it until he no longer has inventory to sell. Then the buyers have to find a new seller, and the only way to find a new seller is you're going to have to do some price discovery. You're going to have to go higher to find where's that seller sitting. If you're a seller, would you be willing to sell lower or higher?
Higher.
Yeah, it's natural. Right? If you want to make more money, you want to increase the price of selling. Okay, so stops. You guys will not see this very often unless you're really glued to the screen. They do happen, right? So they only occur, on the top and the bottom, right? You can usually spot these like intraday as they're most likely fixed immediately on the short term. Sometimes if it's really, let's say like a black swan event or something like major like that, it can look ugly, right? But usually they happen quick. Let's say if you're running a short stop, you're kind of, let's say you're shorting at the top and you're like, oh man, if this stops, I'm just going to go, well, what you're going to see here is that they're going to aggressively, those people that got hit by a stop, if you get hit by a stop, what do? If I'm shorting and it goes higher, what are you doing on your short?
Buy to cover.
You're buying to cover. So your ask gets green up and you're not selling, right? Your bid goes zero, ask, you're going to see this. Those are just kind of the short cover rallies or coverings. And the same is true on the bottom. If they're running long stops, right? If you're going on the bottom and you're trying to go long, they're gonna, and they go below your level, what are you gonna get? Well, people are gonna cover. They're gonna see a lot of bid. And this is usually your adult tape. You want to avoid certain time frames of the day, like post, I would say 9:30 to 11 is good. Then from 11 to 2:30, there's a lot of trickery in the market, right? And usually most people lose their money that they made between 9:30 and 11 during 11 to 2:30. So you guys make money and you give it back.
Would this also be considered stacked imbalances, or is this different?
No, it can be, but you have to know if you're at a major level at support and resistance, and this happens right above it, usually it means that there was a stop loss that got triggered. So that's the context that I keep referring to. There's no hard ruling about it because we can't match the orders. I don't know, right? I'm assuming based on if there was a key, so let's say it's 4,500, right, on ES, and this happens at 4,501 all the way to 04. Should I assume that this was a long level here with this quantity? If the quantity is not drastic, no. I would think it's a short cover rally. They're going to get them all out, and then they're most likely going to go in the direction that they intended to go, lower, but they're going to get that liquidity from you. Okay. And you guys most likely will not see this a lot. I just want to put it up so you guys know what it means if you see it at the top. Usually this leads to traps most of the time. They take your liquidity, and it's one of those when you see, you're like, hey, I'm going to go on the break of this level, and it breaks, stops, and then it reverses in the other direction. You're like, oh, damn. Right? It just went against me. That's usually, what it does. There's a lot of liquidity, stops above. They trigger them, they covered, and then they go in the direction that they were going with. It's just that the stop loss was there.
Yeah, that looks.
Okay. This we covered, right? How do you spot an exhaustion on a tape? If you see large imbalances between buy and sell limit orders, and if you see that there's lack of selling at a certain level, I just asked you guys, as a seller, do you want to sell lower or higher? If you're not interested in selling peanut butter at $10, you want to sell it at 15, are you going to offer any at 10?
If there's no buyers at higher price, yeah.
Well, if you want to sell it at 115, are you going to offer selling at 110?
No.
No, you're not. You have no business selling there, right? You want the price to reach your target ask, right? You're asking 115. You're going to remove yourself from selling altogether. And therefore, if the sell side is weak, right, on the ask, and you see this is usually on L2 tape that you would notice, like an L2 footprints show you the orders that executed already. On level 2, if you see this, right, you'd be a little bit in questioning, because then price can quickly spike through here, right? As you remove the sellers, price goes higher.
So shorty, question. So if I'm selling at 110, I sold it all. Now I want to sell at 115, but there's no buyers, and I don't want to sell any shorter. I just remove myself, correct?
You can put yourself on 115 or remove yourself, right, altogether.
Right, but I won't. And there's no well, maybe go down to 110.
Think of it this way.
No, because then I would.
If you're selling organic oranges and the guy right next to you is selling regular oranges, and he has a lot of demand for regular oranges at $3 a pound, and yours are at $4 a pound.
Yeah.
It's the value of your product that you're valuing higher because it's organic.
Yeah.
Are you going to have the same demand as the guy next to you?
No.
You might.
Yeah.
It depends on demographic that you sell in. It depends on the
Okay.
market. If you're selling in a rich neighborhood where people are really, cautious about what they eat and food.
Yeah, then I'll have some good.
If they start buying your product at $4 a pound and they're ignoring his at $3 a pound, what is he going to have to do?
He's either going to have to drop the price or remove himself.
Okay. And next to you, you're still the only seller on organic oranges. Comes a new seller, and he also sells oranges at $3.50 a pound.
Yeah, I'll either have to drop the price or remove myself.
Well, it depends on how much you're selling. If you have customers that know Cuban and they love Cuban and they'll pay 50 cents more because they know you, then you don't have to do anything. But if your sales start hurting and people are going to the new guy just entered the sell market, right, at $3.50 a pound, you're going to have to do some thinking and adjusting, right? You're going to have to adjust your price.
Yeah.
So that's how you would think about it. And you see if there's a huge demand for both of you guys instead of entering in a price wars. Not saying you guys communicate, but if you increase the price to 5, right, and you have a lot of demand, that guy might increase it too. Where people fail is when they get competitive on pricing. So let's say you see he entered at 3.5 and you drop your price to 3, right? You get some demand there, right? And what if he buys it all from you? What if he's like Cuban? I'll buy all your oranges at 3.
Sure.
And then he sells it at 3.50. Still makes 50 cents a pound.
Yeah.
And that's what market makers do.
Yeah.
They buy lower from you and sell it higher to dumpster. They have a spread. They try to make money on quantity.
Sure.
I wasn't planning on covering volume profile. Is there anyone in need of going through the volume profile through the PowerPoint?
Yes, please.
Say it again.
Yeah, please.
Okay. So volume profile compared to your, vertical profile is the volume at price. When you see, just like your footprints that we see it, price, it's at a certain price level, how much volume did we have? And we assume, well, or the logic is, if there's a lot of volume at a price level and price goes higher from it, that means there's most likely an accumulation to buy, and then they went higher, and we look for retests to buy on those zones, whether it's a high volume node or POC, whatever that is, retest them. Market profile and volume profile are slightly different. Market profile uses time, price, opportunity, while volume uses volume, right? So market profile is more concerned about how much time you spent on a level versus volume profile. It's about the volume, how much volume exchanged at the price level. So obviously the more volume, the more trades you trade at a level, the higher the volume is going to be on the volume profile, and that's pretty self-explanatory, right? And if there's no volume traded at that level, it's going to be a low volume node, or a skinny belly as we call it, and it's most likely going to just kind of fly through it. So you have a couple of components, right? You have the POC. This is the highest level of volume. So just by nature, POCs are high volume nodes. Virgin point of controls I'm adding here is a POC that hasn't been tested. And that, can correlate to whether it's footprint or volume profile. If you have a POC that you go away from in price, let's say higher, and you don't come back to it, that means it hasn't been covered, it hasn't been retested, so it's naked or virgin, okay? When you see a point of control, it can establish kind of like a sentiment. If you're trading, let's say at the point of control and you're, making higher highs from it, that means people are more bullish and they believe the value is somewhat higher of that instrument than what you're seeing on a chart. A lot of times, price is going to spend a lot of time, a lot of volume at POC, hence highest volume traded, and that's where the traders are happiest to trade with. And POC means fair price, basically. It's the fairest price on that session.
You mind explaining that on the chart so that people can see why you're?
That's the next slide. Yeah.
Okay,
so then you have the value areas, right, on the volume profile, which are basically broken down. And for this Discord, we break them down into the first, which is your value area. We call it value area, which is your first sig, right? It's 0.2%, and that's right here, right? 34 plus 34. That's value area low and value area high, or first sig. 95 would be your second sig, right? And that's where 95% of the volume occurred. And then you have the 3 sig where 99.7 volume. So this is your POC, your value area here, and then first, second, and third standard deviation. Then of course, you have the profile low and high, which is your current high, range low. So these are the components to it. And then in between, you see here you have a high volume node, right, where it's sticking out. It's not necessarily a POC, but it's much bigger than the low volume nodes. It's almost like mountains and kind of like the little creeks that you have there. So high volume node, I had to find a picture of dumpster, kind of show it, right? You start with a really fat belly, and then you start biking in your life, and then you lose all that belly. That becomes skinny belly and a low volume node. Not a lot of food in there stored, right? So that's high volume node, low volume node, and then basically it's much easier. The price is gonna go through a low volume node than it is through high volume node. When you have a lot of participants willing to trade in a certain level, they're gonna keep fluctuating. It's kind of like hey, I find value here, I'm gonna buy at this level. Oh, I don't find value here. So it's a lot of happiness to trade at a level, and a lot of trades get executed at high volume nodes. Hence, there's a lot of volume. On low volume nodes, they don't agree with that. They just don't see any value trading at those levels, and they just fly through them. Okay. We use different type of volume profiles depending on what type of trader you are. Fixed range or cumulative profiles We use them if we see, for instance, earlier I grabbed, the Friday POC and then the Monday and the Tuesday, the 2 half days. I personally don't account for when it's a half day. I don't account for that POC of that day at all. So I use cumulative, even though I didn't need to. I could have used Friday value area low and high, but I just did it to make sure I capture where's the 3-day balance low and where's the 3-day balance high, value area high and low. And that's how I use fixed range. And usually on the fixed range, on the setups that we play, is we're looking for accumulation setup. Some people call it rotations. If you see that they're accumulating and then they have an imbalance from that area, spike up like a markup or a markdown, we want to play the retests of that run up, especially if you're in a trend up, making higher highs and higher lows. Same is true for vice versa. If you're in a bear setup, you're looking for where they accumulated, sold off. So when they come back to it, you can look at, potentially for a short of a high volume node. Doesn't necessarily have to be the POC. You're looking for high volume nodes. Okay. Visible range on trading view, basically what it does is whatever you show on your chart, whatever is visible on your chart candlesticks, that's what it prints the volume profile for. Session volume is what we use to kind of identify and see what the market's doing, right? We just had it enabled where you see each day has a profile. Each day would have a POC, value area low, high. You would be able to spot any high volume nodes, low volume nodes, and then you'd be able to tell if, how big the value area was. Was it average? Was it bigger? How big was the range? Those are the things that we spot on, session volume profiles. Usually this is day trading.
Yeah, was it double distribution?
Exactly. Yeah, you identify type of day and you can tell, what is really happening in the market by looking day to day and then kind of seeing a cumulative. If you guys recall that 44.20 level, when we drew the fixed volume profile from the bottom, that was the only thing that had volume on it.
Yeah.
There was nothing on the top, pretty much a little bit on the bottom, but that high volume node was at 44.20, and we kind of said, hey, you break that level, there's a high chance you're going to be going to this mean because there's no volume supporting this. PVP, so you want to understand, a lot of people freak out when the market makes a move like it did, let's say Friday or any other day. But you want to understand, if you're a swinger, right, you look at the monthly RV imbalance, right? If you look at the previous month, did we break the balance of the previous month? And in current month, are we trading in the balance of the value areas? Balance means, are you between value area high and value area low? If you are, that means the market's content and happy, especially if that value area of current month is inside of the value area of the previous month. That tells you there's acceptance of the market within the previous monthly value area. That's really extreme balance there. If they break out of the previous month balance, that means they're in balance looking for higher area. They're looking for areas to kind of consolidate. If they go above and they're staying within the market, within the month's balance of the current month, that's bullish because they're basing and they're creating value higher than the previous month. That would mean that value areas are making higher highs, and most likely you want to see the POC is also shifting up with the price. Okay, and we use monthly, weekly. Sometimes when we get creative, we look at 6 months, you look at quarterly. There's really no right or wrong answer. It just depends if you're looking for a swing or a short entry on the instrument that you're trading, whether it's shares or futures, right? I typically look at weekly FVPs on stocks. When I looked at AMD and a few other ones, I will look at the FVP. You can look at the yearly profiles and see what is really happening, right? Are we in balance? Are we out of imbalance? What can you expect, right? When you're at the extremes, right? When you're at the extreme levels, meaning at let's say 95% of the sigma of the whole value area, there's something to be said about the extremes of value being attracted, right? If you fail to break extremes, most likely you're going to revisit the other extreme, and that's simply the rule of auction, right? If you're not able to break in high volume, let's say 2-3 sigmas, and you fail to establish value higher, most likely you're going to sell off and you're going to look to buy it on where the value is perceived cheap or good value. And that means if you're not breaking value area high, there's a high chance if you fail to do so and build value higher, they're going to visit value area low, which is called what?
80% rule.
80% rule. So, and that's basically your value areas and standard deviations, right? And Is anyone confused on standard deviations? This is straight from statistics, really not. There's a video here you guys can watch in the PowerPoint. I'll upload the new one. That basically breaks down how do you draw fixed volume profiles and how do you find 236. Usually when you're in a bracketed market, I just showed you that we're in a bracketed consolidating market right now. We have the top set at whatever it was, 4480s, and we have the contract low switch there. We're just trading in a range so far. It's really, can you have a bullish market and a bracketed market? Yeah, you can have a trend that's bullish or bearish. So you break the extremes. You need buyers or sellers initiative to break through it. Then it becomes, search of new value. Until you're in a bracketed market and you're not breaking, you're shorting the top 2-3 sig all the way to first sig, POC, the first sig on the bottom, 2-3 on the bottom, and then you see how well it worked just recently. It it played it twice, right? It went up, you rejected, went down, bought, POC, bought. So now if they're not able to break the first sig, right, high chance they come back to POC. They don't hold POC, they go to the value area low or first sig, second sig, and then you're careful shorting because your risk to reward gets lost, right? Any questions on this? Play this video. So here's, a visual that kind of breaks that down. If you guys look at it here, so here's your standard deviations, right? So I put the bell curve here. Here's your POC, which is the red line here. And then the first and second standard deviations you see here. And then you see the 3 sig here. Okay.
I have a question. So when you draw the volume profile, how far back do you draw and decide which levels to use?
Well, okay, maybe I did a bad job explaining, but if I look at the market here, right? If I look at this here, what is market doing right now?
Making higher highs and
Consolidating.
Staying in the range.
Can you tell me where's the higher highs here?
no high highs, but consolidating, right? My bad.
Consolidating. So when the market's consolidating, I rely on SIGs. When the market's in the bracket, like it is right now, what I do is I'll grab the SIGs, and here's my first and second SIG. So here's my first SIG here, here's my POC, and then I just label them, right? So for instance, in a bracketed market, I'll look for the bracket, I'll look for the consolidation, I draw the whole area. And then I mark them up as they are. So this is our CPOC. Here's my template for first SIG. This one here would be first SIG. Then I switch this to 95 value area to bring that. And here's my 95. Yep, here's my 95 here. And I will basically draw this guy here. And then I'll go to 99, get the third. This one's gonna be a tiny bit higher. This one's gonna be lower. And now your first and second sig will be most of the time is gonna be a bounce zone here. If it goes to the extremes of 2 and 3, you're gonna get some other time frame buyers 99% of the time in the bracketed market. And then here you see this. So now what do you have? I mean, if I just hide this, what do you have here? You have supply and demand zones. A lot of demand supply here. There's a lot of quantity to sell. They're defending this level. And I know I'm jumping, but could I not just look at the footprint and see what's happening approaching these levels?
Yep.
So I know, is it true selling or not? So I would do that, right? And that's what we kind of did here, right? And at 74, which was a kind of like an SR flip, you would go there, right? So I'm quickly able to establish the zones for this level right now using the FVP. If we're in an uptrend, so the question, how do I know? Okay, well, what are we doing here? For instance, from here to here, what are we doing? Here you're consolidating in the market, right? Okay, so this is a big consolidation. Then from here, what are you doing? You're making higher highs, higher lows, right? So if you look at it, it really started basically from the bottom here, made a higher high, higher low, higher high, and then you consolidate here, whatever you want to call it, bull flag, but I call it just consolidation. They had another, reaccumulation here, and then the contract switch happened right here, and then they made higher high and higher lows. And now you're making lower highs. Here you made lower lows, but you didn't really take out the lows here. You didn't really take out the lows to reverse. Once you break this trend, if you want to consider this gap here as well, sure you can. Once you break that, then you're breaking from this value that you're building, and you're not finding much value here. You want to find it cheaper, and the next previous zone is here. And if you sell off from here, you're most likely going to get buyers to show up on this level to defend that. If they fail to do that, where did they go?
To the POC of that consolidation.
First target's POC, but ultimately they're going to go here, because if they're value buyers, where do you find value? You're going to find value at the bottom. And then they're going to be quick to react to that, right? So if you look here, let me just not extend it. So here's the POC right here, and here's the value area. So now they would most likely come in here and defend it, fail. You're going to POC. POC is huge, 41.40, and then most likely you go 40.60 here. Okay. In a trend, what I would do, and let's say this is the trend that we are looking for where we started making, I draw it from the bottom to the top. And what does this tell me here?
Areas
There's going to be a bounce right there.
Most likely, if you look at it, this is where I can expect buyers to show up. And I would just make this zone a little bit, tighter for myself. And this is the zone that I'm interested in. And you see it's around 4,300, right? Right here where we bounced off, you see that this shelf is fairly weak. It's not a large shelf relative to everything else. But now if I extend this guy, so here I could expect bounces, and we played this bounce because this was the high volume node. If we lose this level, where's the next level? So you have, this 2 sig here, and probably the 3 sig being somewhere, below here. Most likely it's going to go here and find buyers, because that's what volume also says, that there's interested parties somewhere in here. Okay, so this is the upfront volume profile. If I include the whole thing, I guarantee you the POC shifts from here to the top.
Right.
And now the POC shifted. So now you lose this POC here, which is a cumulative POC. I would look at it. Okay, you lose this, most likely you're going to hit this, call it 43.80. Very high chance. Typically, the way I play, would I short at 43.55-ish? Probably not. Right? Unless I see aggressive sellers on footprints and I see the delta agreeing, then yeah, you can definitely short this and go. Because then, if I'm looking at this whole up front from the bottom, where do you think the POC is now when I do this?
Probably 41.40.
41.40. And you don't even have to look at it. It's going to be here. You see now the liquidity pools. There's a liquidity pool here. They're defending. You lose that. You're going to go to the next one. This one here most likely would be lost here eventually, and it would lead to 41.40. And then, the picture changes as you increase, but look at this POC here. It's pretty massive, like how much volume has been traded at this level. Does that answer your question? How do you know? I'm giving you different scenarios of trend. You can also do for downtrend, right? If you look at this, if I'm looking at the downtrend and selling, I can do from here to here, and I can see, once I disable this, I can see that this POC right here is a level of interest. And where are we stuck?
Right there.
We're stuck right at the sell-off POC from all-time highs to this low. I'm not including this low here because I want to exclude these buyers because they're most likely going to shift it up. That's what they did. So this is where the sell-off was last time. So now, usually what happens, what they do is they will do this, and then where do I short?
Right at that retest.
This becomes a really, really good setup for a short, and they're they're very close there, right? And now if you look at footprints, you can combine some logic, right? See on a bigger time frame, if I go on weekly, what is happening, and we'll cover that shortly here, and you'll see it. Does that answer your question on how and when I use it?
Yes, thank you.
Okay. Value areas and tips and tricks, right? So I suggest that you guys truly read it and not just hear it from me and understand it, and go on to your charts and kind of try to visualize this, right? If the stock price opens above the value and falls back inside value, that's fairly bearish. The rejected value higher,
Very
you're going
bearish.
back, you're going to test the extremes of the low. Same is true for the opposite, right? So we do have different variations. There's 4 different scenarios, if you guys recall, that we cover this, and I'll let you guys kind of read through it. But this is the value areas, the opening and the setups that I care for. Is there more variations of this, and can you add more crap to it? Yeah. I just care about these 4. If you care more, that's okay. I just look at it. Are we opening outside the previous day value area, but inside the range? Range means previous day high, previous day low. And then are you opening outside, but outside the range, right? So if you're outside the VA here and outside the range, that's probably a gap up, right? Opening within value area and you're accepting it within an hour, you're not breaking, that's acceptance. If you open within PD value area and then you break out of it, that means that you're no longer accepting that as a value. You're seeking either higher or lower, right? And then in the PowerPoint here, we kind of go for each one. If what the rules are. If the market opens within PD value area and within 1 hour balance, we don't exploit outside the VA, then you're accepting the previous day value, and most likely you're going to have what type of day?
D-shape.
You're gonna have a D-shape. Most likely it's gonna be a normal day, and the range of previous day is not gonna be exceeded that day.
Yeah.
Okay, and this is just a visual here. This is PD value area high. This is your initial balance with the first hour. You're staying in between. You're accepting this value. You're accepting this range here, this to here. Okay, and this is just an example from a chart, so you guys can relate to it. Rejection is basically the opposite of this, right? If you think about this being acceptance, what would the rejection do?
It would go higher and then reject back inside the value area, or vice versa, go lower and reject back.
Rejection means it's breaking the PD value
It
area
would
low.
break
They're
out
no
of it.
longer agreeing,
Sorry,
either
yeah.
bullish or bearish.
Yeah.
They're not accepting PD value area high, PD value area low. They either agree higher or they agree lower.
Correct.
Right.
Sorry.
And on both instances, you need initiation. You need initiation for buy. You need initiation for sell. How would we know if it's a right initiation?
Retest.
Retest. How else?
Volume.
Volume. What else?
A few candles, 3
What
5
about
minute
delta?
candles.
What about delta?
I say we could do
What about
that.
footprints? What you just talked about?
Oh yeah. Footprints.
Okay. Opening outside of value area, but within the range. That means this is a tricky type of open, and a lot of people, mess up, right? So this is your PD value area high, PD value area low. This is your PDH, previous day range top. You're opening here. You're opening in top here. So it's important if you're bullish that you break what?
The high.
It needs to break the PDH high.
Probably high.
And the bearish, it's important that you break the PDL, or if you're bullish, that you reclaim PD value area low and you get 80% bullish in this scenario. These are good 80% rules. These are good 80% down right here, because it would go most likely from here, right? It would execute the 80% to here. Does that make sense?
Yeah.
Hopefully these visuals make sense. To me, they make sense. I don't know how you guys learn. I'm more of a visual than.
Yeah, me too, man.
And same thing here, the 80% would be executed once the reclaim, and a short opportunity would be here. And I would look at footprints or volume on the trading view and see if it's agreeing with that, breaking that area, right? You need a lot to break range tops. People don't, they underestimate what it means, right? Before you had this electronic trading, you guys do know that most traders relied on a day high and day low, open and close. That's all the analysis they had.
That's crazy.
So And they established their sentiment based on those 4 points. Opening outside a range, so this is probably the most bullish or bearish, right? And the key in this one is what for bullish? If you're bullish, what do you want? What can't break?
The prior day high.
Yes, that again,
If the
please.
prior day high breaks, that's bearish. That's really,
Right.
really bearish. This can be a V shape to the downside. And then the same is true, right, on the bearish side. If you're bearish, you do not want to reclaim PDL. If they reclaim PDL, you want to be careful shorting, right? As you arrive at PD value area low, do you have a stab to take short? Yes, but if they reclaim PD value area low, you might want to get out of the way shorting.
Yeah.
And a lot of times, you guys probably hear me or say in the main chat, they're reclaiming PD value area low, do not short.
Yeah.
If they're able to push the price higher, bid the price higher to find value and a previous value, most likely they're going to execute 80% rule. And what happens in these scenarios with traders and retail, they're like, oh man, I'm short here, but that's okay. They're going to reject here. I'll add short here. Never mind. They broke this. I'm already 80% down. I might as well add a little bit more short here. And then what happens? They lose the
Boom.
whole account.
Yeah.
And that's where, your mental discipline and knowing what's happening in the market, what's generating, whether it's breaking the value area lows or reclaiming them, PDL, PDH, that's important. And that's why we have these 4 scenarios. Is there anyone confused on these scenarios? To me, they're, I would say, second nature. When I see a chart, it takes me 10 seconds to figure out where we are.
So can you explain it just one last time?
Which piece?
Just so if we open and we break the PDL or
in this scenario, when you're opening outside of range, right?
Yeah.
Let's say if you're opening outside range and it's a bullish one, you're opening above PDH, you do not want to break the PDH if you're bullish.
Right. You don't want to come
Most
back.
likely you're going to have buyers that step in right at P. When I say right at, I almost mean like exact points.
Yeah.
If they slice below it, that means that there's some initiation and they're not agreeing on this. Most likely it's going to be a sell-off soon. And you can confirm that using footprints. If you see a lot of limit sells at the price, if you see aggressive selling, if you see imbalances, the delta going negative from positive, those are the clues to know, is it valid?
Yeah.
Right. And same is true for the opposite, right? If I see initiation here, they're coming here and there's a huge delta and a huge ask on a top of this, and we're not going higher, well then combines that it's not a bad short retest of PDL. If I see that there's not a lot of ask on the selling, but they're aggressively buying and creating some imbalances, there's a high chance they're going to get back in and reclaim it. And if they reclaim it and you see buyers step in, that's where we go in.
Sure. Yeah, I have a question. In all of these different opening times, is there do you feel like there's on different days, depending on where we open, if we're opening outside of the range?
Vandal, I heard 2 words from you.
Yeah, you cut out real bad, buddy.
Did anyone hear it or just me?
No, his mic is always cutting out. Can't ever hear him.
Vandalay, I think
It's loud and it
Best
cuts
Buy,
out all the time.
You might want to go Best Buy. If you want to type it up, I'll answer it.
Can you hear me or no?
We can hear you. You just break up a lot, and I
just switched back to my wired headphone. Clearly, the Bluetooth is not working. So
okay.
All right. My question is this: for all these different opening types, is there one type of super the highest probability trade that you can see for different?
Each one of the days has a high probability trade, right? Each one of them has it, right? If you're opening with VD within PD value area and accepting, what's your buys and sells, guys?
Right, the prior day value high or the value low.
You're buying the bottom, selling the tops.
Right. Okay.
If you're rejecting here, if you come in here and you're rejecting, your retest is either PD val or the previous day low.
Okay.
Yep. Opening outside. This day, I hate trading this day. This is my least favorite day. It
Lowercase
can
b.
become best, but it requires a lot of sitting and waiting. If they open above PD value area high, but below the range, just think about it sentiment-wise. You're not so sure that you want to go higher, but you're opening above the value.
Mm-hmm.
You're not sure you want to break the high, but you're above the value. So it becomes
kind of undecided. Yeah.
really undecided. It's a really tricky setup.
Mhm.
Here, 80% rules play out really nicely if you get a confirmation, like 3 10-minute candles on this inside the PD value area high. You can drive this to PD value area low. 80% rule doesn't mean you catch the whole 80% move. You guys, all of you want to catch every single penny of the value move. It's impossible. I guarantee you, I don't catch all of them. Do I catch it with the full size? Do I catch it like, I don't know, was it a couple of days back? I caught NQ long for a lot of points with the runners.
Yeah.
I didn't hold my whole position. I would have a fucking heart attack. At one point, those 4 contracts went negative, then they went positive, and then, I mean, I think my target was 95. It went to like 235 on NQ or 245.
And you had 19 contracts on there.
Well, not on the runners, right? But if I did, I mean,
Oh my God.
the swing on 19 contracts would be, I mean, it's devastating, right? If you go negative, 200, let's say 50 points on 19 that's a lot.
So on this type of day, you're looking for either the 80% rule or for it to break the prior day high.
High. That's
Yeah.
correct. I'm looking for.
And
This is the setup. So I'm looking for a break. Where is it? I don't know if this has like a. Let's try this. Not really good in PowerPoint. I'm looking to. Yeah, I'm not.
yeah. You wanted to break the prior day.
I wanted to hold, and then we would go along. Here we want a PD value area high, first exit POC, and then value area low.
And then between prior day high and value area high, you're not. That's kind of your trade.
That's where I get in trouble. That's why I hate it.
Gotcha. Yeah.
I itch sometimes, like all of you guys, to trade, and the best thing for me when here is not to trade. I don't trust the tops, and I don't trust the bottoms here.
Mm.
It's making me suspect, because if you're really bullish, you would open up above, right? You would find gap up and go. That's why I don't like this day. There's too many variables where it can go, and I just don't like it.
What is that? Uppercase B? I mean B.
This can be probably a P shape here. If you're opening
shape?
above, and
Yeah.
I would say you drove it up. It can also derive from double distribution.
Yeah.
And if I would prefer this in a double distribution, that we are above the high volume node, then a POC, and that we're hanging on to a thread on the value area low of the P shape. I would prefer higher on a high volume node of a double than a value area low of P. If I was to look at the profile types, if that makes sense.
You also don't like the lowercase b neither, right?
Well, it's not that I don't like them. Lowercase b usually indicates that if you're selling and there's accumulation, you're not making lower lows, that there's, that there's profit taking, and that we might go higher as well.
Yeah, kind of like what you just explained on the other side.
Yep. This is important to know outside of this range when you break. As long as they did not break these extremes, PDH or PDL, market is accepting price higher. Okay. Dual tape, I touched base on this, right, a lot. So think about it. If you're a seller, right, and the prices of peanut butter is at $2, your cost is $2.50. What's your interest in selling? Are you really interested in selling?
No.
Okay, let me give you a real life example. Does anyone follow gold much, or I would say gold mainly? Anyone ever watch any gold miner shows? Netflix has a bunch.
Yes.
Did you ever in a show see you're like, man, ounce per gold dropped, stop the mining?
No.
I did. When would the gold miner stop mining?
When it doesn't cover his cost.
If he has fixed costs to mine, and the ounce per gold doesn't make sense, because if he knows on average he gets 100 ounces from his mine, and it costs him, I'm throwing numbers out, I'm not calculating nothing in my head. It costs him 50,000 a day to run it, and he can Now, instead of selling, let's say, I don't know, 1,800 an ounce, he's getting an bid at 1,100, and it doesn't cover his fixed cost or his people or any variable cost that he might have. Why would you mind?
Yeah.
Is it not better off to go back into your house or shed, wherever the hell they live, and just bundle up? Because you're giving money away. So if you're a seller and you're selling at loss, what are you gonna do?
Yeah.
On the market, what they do is, back in the day, lunchtime comes in, all the boys are in the coffee shops. All the floor traders, right? They're in the coffee shops. And then how do you interest the seller to come back into a market?
Increase the price.
Exactly. If the ounce of gold goes to $1,800, what do the miners do?
Come back in mine.
They come back in mine to sell to you. They're not willing to sell when there's no profits.
Yeah.
And same with the sellers in stock market. If you see, we had a sell-off and we're coming to a point and prices, okay, I'll add two components. Price is not going lower. The delta is shifting from red to green. There's a high chance you're going to bounce. Right? So a dual tape happens a lot. Lately, it's been happening a lot more than before, just because, the more aggressive buyers you get. And I would say ever since COVID and people working from home and having more time on their hands, a lot of people, I would say, stumbled upon trading and got lucky, a few trades on AMC and all that fiasco of short cover rallies. And what does that do to people? They smelled money, they took away your money, and now people, they want to make more money, but they're just doing the same thing over and over, and hence 5% traders succeed, 95 doesn't. Right? It's the concept of them failing to understand, first, value versus price. Second, they don't have a plan or a strategy or knowledge. And once you combine that, you're not playing with the big boys, you're playing against them. And people that are stubborn, perma bulls, perma bears, they don't last very long. You as a day trader, you should not give a damn where we're going, as long as you're going with them. They want to go down and you're with them, we're going down. It's almost like one of those roller coasters, at Six Flags. If the whole big boys are going up on a roller coaster, you're going with them.
Yep.
They go up, you go up with them. They go down, you go down with them. As soon as you miss that trend, and that's why I say you did, an imbalance on the footprints, you do not want to jump in on a sell side imbalance and pretend to be a hero and buy it.
Mm-hmm.
When the sell side comes in, they're trying to aggressively get rid of it. So, and dual tapes usually get stopped, like I showed you, with an absorption, and they're not making lower lows, and then they just spike, and people lose a lot of money due to dual tapes.
Clap you good.
Okay. Another concept, right, that it's important for you guys to understand, and it's covered in the previous examples of PD value or yellow, is the first hour of the market, right? It's initial balance of the market, a market profile, volumes. We use that, right, to see how's the market behaving. What's the sentiment of the market for the first hour? Are they breaking the initial balance high or not, right? And combine that, like we saw earlier, with PD value area high, lows. It gives you a lot of information, right? It's important to know about the 88% rule on this. If you get a couple of candles, let's say 3 5-minute candles above IBH, there's an 88% chance that the low of the day has been set, and vice versa is true as well. Does that make sense?
Yeah, don't confuse that with the 80% rule.
Yeah, that's correct. I was trying to be careful. There's just call it a strong opportunity if we spend some time above IBH that the low of the day is set. And if we spent a lot of time on the bottom of IBL and we broke it, the 1030 period, there's a high chance the high of the day is set, and that can give you some opportunities for shorting, right? If you push the price up to a certain level, that's not a bad short, because you have a really, really high probability you're going to be right moving with the market. And same true for bull side. If you know the low of the day is set and you're coming to a level based on volume profile, right? Volume nodes, you look at it, you see a HVN there. not a bad buy, to put some there and look where we are in terms of relationship to the initial balance. Are we close to initial balance? Then just put that below the low of the day. High probability your trade's going to work. Okay, so this is just a quick example. You just find the high on 30 minutes and you find the low and you mark them IBH and IBL, and then you look, see how they respond. And you see here, we're having, in this example, for instance, it was just a range day. Range day leaning more to what? Called neutral extreme bullish, right? You close above the POC in a D shape and you're pushing the boundaries on the value area high. Okay. So day profile types, I mean, I would say all of you should know these by now, right? If it's a trend day, you're making higher highs, higher lows. Double distribution day or a B-shaped volume profile is the second one. Usually you start with a narrow initial balance, then you have initiation and selling, and then you have a distribution. If you break lower, it becomes a trend day. If you bounce there, you're going to play ping pong, becomes a B shape, right? Typical day, usually, and this is important that you guys know, we spend a lot of time in typical days where we have a wide initial balance and then we just kind of play in between, right? And your job as a trader, if you see within the first hour you have a wide balance, initial balance, what are the odds of breaking a wide balance?
Low.
They're low. If the balance is narrow at the beginning, what are the odds of breaking that?
High.
Very high. So if you see that we're playing tight range in the opening, you just sit still. Don't try to predict it. You want to sit still and see which way it breaks. They will give you an opportunity to get in
Let
on the
them
breaks.
explore.
Yep.
Let
Let
them
do
explore the new value.
heavy lifting for you, right? Don't try
Yeah.
to predict that.
Yeah.
Then you have the extended typical day. On extended typical days, and most of you are like, how do you know the range? Well, the more you trade, if you trade 55 stocks, you will never know what type of day they have. I don't day trade a lot of stocks. I buy, ES, NQ, SPX when the options are, not as crazy. I trade options as well, but I'm familiar with ES to know how big of a range is big and how big of a range is small.
Yeah.
And the more stocks I say you trade, the less likely you're to know the relationship of that stock and how it behaves, and it's not in your favor, right? To do that. So I suggest you guys pick a handful of stocks. If you're trading just stocks like Tesla, AMD, find some in different sectors. So if there's a rotation in a sector or what's going on, they're able to distinguish that. Okay. The trading range day, that's kind of what the Friday looked like on the PowerPoint that I showed. It's initial balance. And between typical and the range day, that's the toughest, I would say, to differentiate. On the range day, you are tapping the tops and bottoms. Are you going to get a perfect top and bottom of the lows and highs? No.
No.
You're not. If you're looking for perfection in the stock market, you're probably in the wrong job. You should be a doctor or something where you need that. Stock market is not going to give you a perfect bottom, perfect top, and it's going to send you a text message and a reminder email that it's a range day. It doesn't do that, guys. It happens quick, and you have to kind of start recognizing and repeating, honestly. If you guys don't spend time on the charts and you don't look at the value areas, and you guys see me measuring, did I measure the value areas the other day when I told you guys the move is coming to an end? Or do you guys remember when I measured between POCs, the shift in the value areas growth? You guys recall that in the watch list?
Yes.
Anyone else? Do you need me to bring it back? I did, if you guys recall, I did something like this. We said, when the POCs were moving here, it was here. Where's my? We said, you had this move, then you had the shift from here to here, and then it started going, and then we looked at this move down, and we said this is coming to an end, right? It was this move here, and then from here to here, they were compressing the shifts between POCs, and you see the compression really, really starting to happen here, right? So there, and then you notice the value areas, right? You measure the value areas itself of the 68%. And you see, right, this is a lot of buyers and sellers. The bigger the value area, the more buyers and sellers, the more participants are involved in it. Then you see here, not a lot of participation. Higher, we went higher, we rejected it, trapped some longs. And then you see, a shift in value area, making lower high, lower low. POC, lower low. Value area high, lower low. What do you see here? What's between this one and this one?
Bigger
Wider.
This is
Wider
an
balance.
engulfing volume, isn't it?
Mhm.
This one engulfs the previous volume. So you made a higher high and value area high, made a value area low, lower low, POC shifted. Still some downside, but I would say this should be your warning sign for reversal. Then they shifted here, they sell off, right? They sell off, and look at this right here. POC shifts drastically. This one does not shift here, and you're getting these B shapes profiles. When you get these B shaped profiles, somebody's taking profits. The volume is occurring at the top. Somebody's taking profits here. They broke, right? And I wouldn't say they broke with the B shape. They rather broke in a D shape, and they came back to it right at the close. You see that they're trying to push back here, and they made a trap. They really closed here at the value area, right? And then the next day, if you're able to break this, and I think we had this actually outlined, I'm pretty sure I remember it. If you're able to break that level, there's probably a go-ahead time on ES, and they executed that perfectly, right? And same thing happens on upruns, right? You see here value area shift, huge P shape, and a lot of profit taking here. You got to exclude these 2 days because the week was really short, right? And now you're watching if they're able to reclaim this level here. Let's call it 78 gets reclaimed. I wouldn't be shocked to see 4,500 and higher to be reclaimed. So hopefully that makes sense here a little bit. Each one of these days corresponds to a volume profile, right? So like a D-shaped volume profile, if you guys look at it, there's a lot of them, right? I think they're the most common one. Like I would say this is close to a D shape here. This is not a bad D shape here. This here would be a P shape volume profile. On P shapes, how do you play P shapes?
You play the nodes, the high volume nodes.
The idea is that you play the high volume nodes on the retest, right? This week is just a little, I would say, off because of the 2 days that we didn't have. On P shapes here, right? If you have, I'm sorry, on the lowercase b, you do the same opposite. You would play the high volume nodes of such there, right? If on a P shape like this, you come back and you reclaim the POC, 99% of the time, that's a go ahead time. It's going to go higher, right? If this was to bounce here, reclaim it, it has a chance to rocket. Because if you think about it in terms of buying, that means they accumulated here, let's say on this level here, they accumulated heavily, right? If they accumulated here heavily, right, and they popped and then they reclaimed the POC from there, if you didn't want to play this, play the retest of this POC because that's going to be huge, right? That's going to show a lot of power, a lot of direction on the buyers and aggressiveness, and you can confirm that with footprints and see, but most likely that would mean bullish continuation if we break this level here, which is, what is it, 44, call it 94. That would be the case scenario. That's D shape here, and usually on these shapes that means value is being accepted. How do you play it? You buy the tops, sell the bottoms, and 50% or the POC is your target. On P shapes here, I mean, we just touch base on it. You want to play the retest of high volume nodes. Some people correlate this with the VWAP, right? Usually what they do is they drop it below the VWAP because all the VWAP people failed, and they bounce it off the high volume node, like in this case. They'll bounce it off the high volume node and then reclaim the POC's real signal. Hey, we're going higher. The sentiment shifted. And that's exactly what's covered here. P and B are just the opposite. Whatever you do in P, you'll do the opposite in B. How to trade it, same concept. B shape here. This is a double distribution. This is what Cuban was alluding earlier. Most likely, a lot of times we bounce in between the high volume nodes. But if the high volume nodes are broken in either direction, yeah, you want to play that direction. there's a high chance you're going to get an influx of buyers or sellers initiation if that happens. Okay.
So, Shorty, I have a question. These shapes are being formed on the day. How do we play them when they're not formed yet? Or are we playing them the following day?
You're
Okay.
always playing the following day.
Yeah.
Okay.
You don't really care about, you care about the profile that's being created to tell you what's happening. You don't play the levels of the same day. You guys will hear me. There's a current session POC. If it's early in the day, most of the time I don't put any weight on it. If it's 3 o'clock and we're coming to a POC, I put some weight on it. What are the odds of them shifting that POC in an hour? Probably not a lot. Probably they're going to keep it and bounce of it or whatever, right? But towards the late of the day, I trust the POC's level a little bit more, right? Than
The high,
early.
the value area high and low, they also play it.
Exactly. Yep. So you don't want to trust it in the morning. You use the previous day levels, just like on PVP. If I look at this PVP here, this is going to be our weekly. So here's your PVP. I believe this is weekly. This looks a little, oh, no, it's monthly. I was about to say this looks way too big. So here, if you look at it, right, on a weekly, the analyses are identical, right? So yeah, the value area high, that was good, and encapsulated this one, then this one got encapsulated or engulfing by this one. Now, the POC of this one is the value area low of that one, right? So if you saw this coming, and we know the cumulative level here was 19, right? You see how well that would have been a good buy at this level, right? So you had some confluences, right? And if it happened, right, this happened on Thursday towards the end of the week, you can trust that value area a little bit more than if it was a Monday or Tuesday.
Yeah.
And look where they rejected on that date. They went inside the value and they came back here and they popped it down, and now we're below the POC. Is there a high probability that, you know, if we lose this level right here, whatever that is, call it 37.25, that we're gonna go between 20 and 18? Yes. Very high odds. And right now, the market, I would say right now, market's in balance. I mean, obviously here inside the weekly, depends. If they gap up tomorrow over 77, we would be weekly in balance, or go below 20 weekly in balance, targeting 81. But that's just quick analysis off the weekly. And each profile, right? This one has 7 days on the weekly. If I turn on my SVPs, each day is gonna get, and I use 30 minutes on the daily, is gonna get a story of its own. And that's why we use these, just to kind of look at the market and see what is really happening here. Okay. SR flips, I mean, I think for most of you guys, you should be familiar with this. What was once support becomes resistance. I'm not going to spend a lot of time as I want to get to the footprints. You know, if this was support previously and you're coming and retesting, it's not a bad short, especially if you happen to draw a volume profile and there's a high volume node POC sitting there. It really amplifies the probability of your trade working. And now you add the footprints to it, and it really becomes a deadly, deadly combo for you to know how's that level gonna, is it gonna hold or is it not gonna hold in your favor? Okay. Support resistance. So same thing, right? This is just the opposite. Support. This is support, resistance here, flips. This is your long entry. There's some rules about, you know, consolidations being measured moves. You can definitely do that. Measure this move and you put your target there, and that would be the target you play. Okay. Candle formations. I'll leave this. I think you guys can go through this. It's a little less complex than footprints, I would say. And you can read this, how they're formed and the meaning of them. Just the pin bar examples. Here's your setup, right, with the value areas. You know how you can play them. What is acceptance? What is a rejection, right? Off of these, here failed, reject them, short to 80%. Acceptance of new. So you're breaking the value area, you're coming back on a retest. This is meaning you're accepting a new value area, which happens to mean something like this, right? Identical. So let's see. So that would be that, and then drop below and regain. So usually this is the one where I say they're regaining the PD value area low. They drop below it and they push back and regain. This is usually a good sign to go along and turn your sentiment a little bit bullish because other time frame buyers stepped in. Okay. A volume accumulation setup. This is a really good setup that I use a lot. Usually, if you're accumulating at a level and you pop from it and you come back, I mean, you see a lot of times this is going to work. So now, if you guys do get into the footprints on Delta, you can get a really, really good confirmation if this is going to hold or not. Right? If you're coming here and let's say you're seeing Delta fading away on negative side, switching to green, and you get a nice little pin bar here, you get a lot of those check, check, check. Okay, I'm taking it. You define your stop loss, you define your targets, and it should be a probable trade in your favor, right? So I'm just giving you a little bit more ammo on what you can do to find those setups and have the probabilities work in your favor.
Those imbalanced candles, you mean?
Yeah, you have that as well.
Yeah.
80% rule. So 80% rule, if you're new, I covered it here probably better visually, right? So if this is our PD value area high and low, remember if we open above PD value area low, or if you spike above during regular trading session, and then you come inside, right? There's a 80% chance if you spend at least, if you're new, use 10-minute candles, 3 10-minute candles inside the value area. There's a 80% chance that you're going to go PD value area low. Okay. And that's, in this case, this is be a bearish candle, right? You see the new day break here, you're covered in, you went above, you didn't like it, no value found, you're bringing it back inside. These sellers will want to buy it at the bottom of the value where they think it's fair value. And most likely they drive the price all the way down. Bullish, same concept, right? Let's say you start, you break below the PD value area low, or you gap down. And that's why I say the gap down, because if this is my range bottom here, right? If this is the PDL, let's say this is the PDL right here, and you're opening below and you regain it, that becomes a really good 80%. That's highly probable that it can work. Any questions on 80%? A lot of people find it confusing. I think it's fairly simple.
How do sellers drive the price down? I don't get that.
Because if there's initiation of selling, if you get an imbalance in a large sell order, right? So let's say here at this level, you had a large sell ask, right? Somebody was waiting and selling at this level, let's say $100. Then here you catch some aggressive sellers right here, meaning, hey, I saw a limit sell order, and then they are like, oh, well, let me get rid of my inventory because this guy sold his. And they see that, right? They see the volume, they see the orders. Think about it back when there was no electronics. People were sitting on the floor and screaming, buy, sell in quantities. So let's say everybody's screaming buy, would Free come out and be like, hey, I want to sell?
Yes.
On the floor, most likely none of those people existed, right? Unless you're, a billionaire and a contrarian trader and you're doing long term. If in a day, in the first 30 minutes or an hour, you're seeing people screaming buy, 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 and it's not slowing down the sentiment of those traders screaming, then you're looking to go with them, right? You want to go with the buyers, with the sellers. So if you see a big seller executing an order, somebody screams, sell 100,000 shares of AMD or something crazy here, then you're going to get these aggressive sellers to step in and follow that if the price is not making higher highs. That's how they drive the price. The aggression sells the price down. They're selling a bid.
Got it. Thank you. Sorry, I got it.
No, that's good. Settings on the volume profile. So in TOS, we did share the scripts if you're using TOS. TOS lacks a lot of, say, flexibility with volume profile. So I use TV for volume profile studies. I wish they had footprints on it, but they don't. They have some stuff. It's just very hard to find the setups for it. So I've been on and off Ninja onto the Quad Tower, trying to set that up to see how it works. And I don't know if Quad Tower is the final one for the footprint charts, but we'll see. But that's what I'm using at the moment. Ninja is good. It's just a lot more clunkier than Quad Tower. Okay.
You don't like Sierra chart?
Sierra chart is good, but it also requires, I would say, a lot of knowledge to initially set up the templates on it. Unless you have, the templates that you're using, then it's a different story. But you still have to kind of, I would say, tailor them to yourself and how you trade. Are you using Sierra chart?
Yes, I am.
Yeah, Sierra chart's really good. And if you have a template that you can share, well, that'd be great.
Sure. I'll put it in the chat.
Okay, perfect. Yeah, Sierra chart's awesome, especially if you have, and you can find templates that are free, but then if you need a change, you have to know some stuff to change it. I just wasn't good technically to figure out some stuff there. Profile settings, trading view, fixed volume pro, use size 100, value area 68. Remember, this changes based on SIGs. Session, same as above, BPVR 268. And this is all subjective to, you can change this, it won't hurt. When I'm using monthly profiles on PV, I use 4 hours. Weekly, I use 1 hour, 65 minutes. That's just high level settings. Right. If you're a short-term traders, you're most likely going to use session volume profiles day to day. If you're, a long-term trader, you're going to use most likely, I would say, weeklies or monthly, sometimes even quarterly. And then FVP becomes your friend because you're truly grabbing those ranges, I would say, on the longer time frames and seeing where's a good buy for you or where's the equilibrium or the mean that you can get in and drive the price of the rest of the buyers that if they defend that. Okay, VPA, I'll leave this. I just want to get to the footprints on the chart. You guys can read the anomalies. And this, I think if you understand the volume, horizontal volume price analysis, it will complement you well in the footprint charts, if that makes sense. For instance, if it's a high volume bar with a high volume candle like this, the candle of the body of the candle, I'm sorry, if it's representative relatively strong compared to other candles, that's a match, right? High volume, high candle, low volume, narrow body spread, that checks, that's a validation. And here is the same thing, low volume, small candle, it's picking up on rising volume, that matches, right? It's good. Anomaly is when you have a below average volume and a widespread body candle, something doesn't match, somebody's not in it, right? Either it's institution or somebody's not following up with this. They're buying smoke here and you're just buying it while they're most likely selling, and you'd be able to tell that by seeing the delta, right, and the footprints to see if it's true or not. Mainly delta to know, hey, who's aggressive here. Multiple bars here, validation, same concept, right? As you're going down, this is selling, this is validating prices going down correctly. So hopefully I didn't go too quick, but this is in the PowerPoint. You can read through it word by word and kind of check it out. Fib standard deviations, we have these. I don't necessarily use these a lot, but I think some people ask for it. You can set them up this way. Golden pocket fibs, this is what I consider golden pocket. There's a lot of different people that use different pockets between 50 and 61.8. You can definitely use that. I use the golden pocket between here. Some people use, I believe it's 70.6 or 8 as a level for a rejection. You can definitely do that. It's up to you, but this is just what I use on the fibs. And if you're trending, just know how are you finding support and resistance, right? If you're trying to find support, you're drawing from bottom to the top. If you're looking for rejection, you're going from the top to the bottom to find the fibs. Okay. Any questions here? Especially newer folks, did you pick anything up on volume profile? You have to start playing and drawing volume profiles for you to understand it and see it. You have the content here, what it means, what it does, how it works. Till you start practicing, you're not going to see progress, right? I mean, it's almost like me giving you at age 16 keys to Lambo and tell you go drive. You're not going to most likely come back with the Lambo. Okay. I just need 5 minutes break, and then I'll hop in the footprints. Just need to get some water, and then I'll go live on the footprints and cover some stuff there. So
Thank you,
everybody,
Shorty.
if you want to take 5 minutes, and then we'll hop.
Thank you, Shorty.
Thanks a lot, Shorty.
Shorty. How's everyone's Saturday going so far?
Are you by the way?
Oh no, I was just asking how everyone's Saturday is going so far. So we're on a 5-minute break right now.
Doing some yard work while I'm listening.
Hey guys, I'm back. Guys there?
Sure.
All right. So let's kind of talk about first the setup, right? If you're in a quant tower, right, there's a couple of setups that I learned as well, right? I wasn't born with figuring out this platform. So the first thing you want to do is click on this image here that will enable the bottom profile here. Once you do that, you want to click on the cluster chart and then you want to click on the settings, right? So once you click on the settings, there's certain things that you have to change, and I'm not gonna go as slow. You guys will have the recording and kind of go to it, but I'll explain each one. Imbalance, you want to select the imbalance. If I change this to single, I'm just going to see the single prints on the buy side right here. So if I zoom in, let's see if I zoom in here, let me go here. You're not going to see much more than what you're seeing here right now. You're not going to get the imbalances in the number and sizes. So here, if I go on double, now you're getting a little bit. You're getting the buy side and the sell side, and you're going to get this, right? The other one just shows cumulative, what the difference is on it. Here, you're going to be able to see, right, the bid and the volume size of each. And the imbalance is the one that I prefer to use. It's basically the difference there. What's the ask, what's the bid, and you use the diagonal setup on it. The next setup that I do is you can do coloring by delta. Some of the people that that I know that use this, they use it. The delta would mean that they're selling here at the red sign, buying here, and to me it's just a lot of noise. You can use it if you're comfortable with that, and in smaller time frames it can definitely help visualize stuff with colors. And if you guys look here, I'm just using the delta determines the color of the boxes. And you can see here, once you're here, you see not as much green, but there's a lot of red here by delta. And then you see the delta is agreeing with that, negative 2600. I'm on 10 minutes here. And there's some sell side, right? So on the cluster charts, you can change that by changing this delta coloring by volume, or you can just use histogram. That's kind of what I prefer. And go from there. And this is what you get with the histogram. And I'm able to tell, not looking at the bottom delta and looking at the sizes here, what is going on. The next thing that you want to check here, I unchecked this, and this is after I talked to their support, right? That helps you aggregate profiles. It doesn't compress the candles, because if I click this last time, it would just compress them and I would not see much, right? So and that's just part of new platforms. When you switch from one to another, when you look for something better and you don't know it, you're gonna have to learn it, right? The value labels, the text that's right here, you would select that. The volume color is these bars. If I want to change that to be this color, let me change it back to something what it was. And you can change this here as well under settings. Let's see, I can change this right now. I'm changing that under main settings. I'm just going to default it here. Let's see, so that we covered. Volume color, you change it. And this is the imbalance ratio. Remember how we talked about the imbalances earlier, right? So let me see if I remember where they were, if there's still some. Okay, there's one. You guys see the sell side imbalance here, or maybe, yeah. So there's a sell side imbalance here from a different time frame, and you see that it's highlighting that. So you can set up the rules on what colors you write. I mean, it's all dependent on you. You see the sell side imbalance here for red. If I want to make this white, I can apply the changes here. And if I want to make this, I don't know, light, let's say grayish here or whatever, let's make it purple. I can apply this, and you see that this sell side imbalance here was fairly aggressive here. If you look at it, it's 52 to 1, 92 to 5, and then it's 1200 to 98. So it's pretty good sell side, right? There's just more than 6 to 1, and it highlights those. And same would be highlighted if there was a green side imbalance. And hopefully you guys can visualize where it would come. If you see a stack of 3 orders, like let's say, I think there was one in 5 minutes that was left. Let's use imagination. So imagine if this was the green side, 3 of them here, you would basically get a box. You would get a green box here, dependent on how big the ratio is, and that would be the buy side imbalance, and you're looking to buy there as we revisit. Let them go away. Once they come back, that becomes a good zone to buy, and you would confirm that, right, with the delta.
Oh yeah, I did notice that on the chart that it does those bars.
Yeah, that's called a stack side imbalance, and you would check that right here. You would
So that would be a good place to where when the price comes back to there, either go short or long.
That's correct. If it's a buy side, you want to go long, and if that buy side imbalance is lost, that becomes your short side. If they basically break that imbalance buy side, that becomes a really, really good short side imbalance to trade from. Okay, and you can enable 9. I just the odds of happening that are low. If you can change this to 2 to 4, right? But most traders stick to 3 and 6, and then you would make sure you click this show stacked imbalances, and you see this zone count. This is basically telling you how many of these imbalances need to happen in a row for you to highlight the zone. So for me, it's set at 3, right? So that means I would need, let me go here.
Jody, would it be too much work for you to put those settings in?
No, it won't be too much work for you to look at the video.
Oh no. Yeah, you're right, buddy. Sorry.
So I put some of the PowerPoint, but I just figured live would be much easier.
Yeah.
For instance, if you see here, there's 2 imbalances on the sell side, right? So if I was to change the setting, right, on cluster, let's say I change this on cluster to 2 right here, it should highlight this sell side imbalance. And now this thing activated out of nowhere. So let's see, if I change this here, it should activate, and you see that. You see the sell side imbalance? It just triggered.
Yeah.
So now I'm looking for 2 stacked imbalances, and that they would be showing up. I don't know why this screenomatic.
Stacked imbalances meaning 2 orders.
2 consecutive orders that created the imbalance.
Gotcha.
And you see here, there's some on the buy side, right? Pay attention to this right here, 4971, 367. Can you guys see it, or is it too small?
No, we can see it.
Okay, maybe this back.
Yes, we see it.
You see here the buy side. You came here, and that was a good buy side. They bought it here. But once you lost that buy side, that becomes your short opportunity. Really, really good short opportunity. That means all the buyers got exhausted and the sellers were really, really aggressive. How aggressive were they? Well, take a look at this. You had a complete auction here, right? You completed it. You sold off aggressively. Then you had some selling and then a continuation of selling. Where the buyers were last time, the sellers came in and broke through that. And then look at this seller here.
Oh yeah.
They're coming in, POC formed lower. Once you clear this low,
That's a big order right there.
Yeah, this is only 30 minutes. And look at your
5,000.
delta here, for instance, talking about absorption earlier, right? 56 volume, 700 delta, 1700 delta, big pop on the candle, right? There was a buy side imbalance on 2 stacks here, and then they broke above it. Now pay attention to what happens at the top here. What is happening with volume here?
It died.
It died on the
Oh, yeah,
volume. I mean, you lost 33% of volume, guys.
Yeah.
And your delta got cut in half. And look at the ask side. What happens on the ask side? Pay attention to the ask here versus ask here. What happened?
Oh yeah, much bigger.
Did it double?
Oh
Or triple? They're
Yeah.
selling here, guys. That was the 44.74. It was an important level. It was a value area high of the current weekly. It was a flip. There was so much on that level. They're selling here. And then look at the imbalance here. Somebody, you got to feel bad for them. They're trying to break this top here. And they just got handed. Look at the ratio between this and this right here.
That's aggressive selling, right? That's because they're selling at the bid. Okay.
I mean, they're giving it to them. They're like, here you go. Here's your peanut butter. You want it? Take it. And then look at this. 72,000 contract with negative 4,000 delta. This was 97,000 contracts with 49,000. I mean, 20,000 contracts, 800 delta variance. And then you see, as you're approaching the buy side, what's happening. I just covered this in PowerPoint. You're coming and they're slowly absorbing it. I mean, it went from, I mean, remember, I'm on 30 minutes. They're coming here and they're buying it, right? So if you go on, let's say 10 minutes, you know, they're coming to that level, and you see here, right? You can look at the smaller time frames and look. Auction completed right here, and you see them, right? Now, in order for this to fail, you need aggressive sellers to step in. And aggressive sellers seem to be stepping in once they broke this level here. They completed the auction here with aggression. Like they're like, this guy got caught holding really, really bad. Right here. And then they basically dumped it. They sold off. A lot of aggression continued. And then look at Delta picking up here. They tried to bounce and then massive sell-off. And then
Picking up negative. Yeah, yeah.
You're approaching here, and look at the buy here from this green zone here at the end of the day, right?
Okay, so that's yeah.
And what do you expect to see on the bid side here?
Aggressive buyers.
On the bid side, you expect to see some larger orders, right? And look at these orders that are coming in here.
So those are the passive buyers, right?
Those are passive buyers because
they're
they
just
show up
sitting
on the
there.
bid side.
Right.
And look at this right
Did you
here.
say passive buyers?
Yeah, they're passive buyers. Remember,
Okay.
they're
Because they got their orders. I got you.
Yeah, they're just sitting there, right?
Yeah.
They're not moving the price. They said when the price comes to this level, I'll buy.
Yeah, yeah.
So that's these guys sitting here.
So
And
that's
then
the limit orders, right?
That's correct. Those are all limit orders. Limit gets paired with market for market play.
So the market orders move the price more
That's
rightly,
correct.
right?
Market orders move the price higher and lower. Aggression moves. If anyone ever tells you, I know this is my pet peeve, if you guys don't know, there's never more buyers than sellers, more sellers than buyers. It's impossible.
Yeah, right.
If you want to buy something, somebody's got to sell it to you.
Yeah.
Unless you're buying fucking air and selling air, you're not going to have anything.
So basically, market orders moving the delta.
That's correct. They're going to market orders one that moves the delta because market sell a bid is -1 on one contract.
And you had that purple zone drawn from a previous buy side imbalance.
I didn't have this buy side.
Oh, okay.
I switched this to I did not buy here.
Okay, but that would be the idea.
Some of it, correct. I scalped some of it, but I did not buy it. I like this at 3 right here, and if I switch it to 3, that buy side's not there.
Okay.
Cody, that those indicators are what, about $70 a month? Is that
I
right?
pay $70 a month, right, for it, and so far I can't say. Only thing I dislike sometimes I have like TD Ameritrade connection here. Knowledge helped me set up some other connections, but it really is. Sometimes it feels like it lags. I feel like it's delayed, and I don't know. I've sent them a message to see if it's my internet or if it's them. I just don't like when it tells me something is delayed.
Sure.
And like I just don't know like what's happening.
That's what
Sometimes I
that's
have
what
an order and I have to shut down and see if it went through or not.
I guess that's what I was saying earlier, that, you know, it looked like it was lagging, like the price was going.
And it happens, right? So that happens, right? But
I
these
got
are
you.
all the settings that I have, and you can change these colors if you guys want to use. I don't really like. I try to keep my colors on the buy, like green and yellow, and then on this side, I don't know, weird. I like darker colors, like pessimistic way of looking at it. And I apply these colors and use them. If you want same colors, I'll put the little hex code. I'll give you these codes, and you guys can use the same colors. But that's what the settings are for cluster, okay? That's what you would use. I just want to cover the settings for time statistics here.
Yeah.
You have to enable it, right? So if you right click, you want to enable it first, and then you click on settings. And here you can play with this, right? If the volume color, if you wanted to change the color, see this little line that has a strike through it?
Yeah.
The color is not going to change based on it too much. You want to put something like, let's say this, you want to change the color to solid blue, and you see how it shifted the color coding.
Mm-hmm.
If it has a strike through, it doesn't do it. So here's this one, the green, you just find the green one without it. Let's see, pick one here and then change it to green. Sell, pick one without it, and then whatever you want it. So here, now it's gonna color code the delta, right? The brighter here, the bigger the delta, right? And you see the green here, 544 versus 64, slightly different colors. The ones I care about, and they show up here on the right too, volume, delta, max, min, right? If I didn't explain it well, let me know. Volume is number of contracts traded for that candle, right? And here you see I have it above where it says like a little V, 174, 679, that matches right here. 64.93 matches, so you don't have to keep this on the top here. You can hide
those
that,
are the
right?
settings I've got.
And I just like to see it in case my eyes are not on the bottom, they're at the top. I can, I don't have to waste time looking for it. So I have volume, delta, max, and min in that order. Volume, delta, max, min. And I explained, right? And I'll explain again how I kind of use min and max delta, right? So if you go on scalping time frame here, and I'm still working to figure out how to auto zoom. I haven't figured that out.
That's the worst feature I have. Yeah.
Yeah, it's fucking painful. And these are the little things that bother me, right? I mean, if I
You can't
fix
just
them,
double click.
no.
That's how it. No, okay.
It would be nice. Yeah, that auto zoom would be nice.
Yeah, that's the the nuances, I guess, that I struggle with. So, anyways, so if you got well, some of these are not going to show demand and mix, but let's say that the min delta, which means the negative number here, was negative 1500. Just imagine, right? And it closes at 657. What does that tell you?
Selling absorption.
That's telling you
Possible.
that selling is being absorbed here. Then what you're looking for is think about it. I'm on 5 minutes, guys. On 5 minutes at 355, a delta of 7100 is pretty big, even though it's the last 5 minutes. There's some heavy buying here, right? It's 5 minutes. Remember, I don't care too much about the volume. I'm just giving you an example.
Mm-hmm.
I did buy this, even though it's an example. I did buy that. They're coming in, aggression came in, and then they, had more aggression here and more pop. You can buy that, right? So that's how I use min delta. If min was negative 17 and delta is closing at 615, that's the delta current minus the minimum, tells me that there's a divergence, right? Something is being absorbed. I use min and max minus the delta to tell me if it's being absorbed or not.
And are those candles not showing the min or max now because past, or why are they?
Usually sometime after hours it doesn't do that. I don't know. I can't tell you.
Huh. Okay.
Yeah. No idea.
But during the day, you would see
Yeah,
even
I
previous
see them.
candles.
Mhm.
Okay.
Yeah, I see the min and max. But right now, I don't know why it doesn't. Yeah.
Okay.
But yeah, just imagine you do. And the same thing happened at the top, right? If the max delta, right, at the top side, compare max. This is the pain in the butt. Look at the max, right? If the max was, let's say, right here, if the max was, let's say, 2200 here, but your delta is at 1200, then I know that there are some aggressive sellers that are taking away from you. And there's another feature here, actually, that you can enable, and it's show delta change, right? You see this delta change here? That tells you what is the delta change that's happening between the candles right here. Does that make sense? So delta 447 to 1335, right? You see the delta changes between this and this is 1335 between these two. Between this one and this one, the delta went down 500. Negative 1200, negative 122, negative 500, only went up 600. And then look at this. So just based on, what you're, click the wrong damn square. Sorry, something with this screen-o-matic. Don't know what's going on. Yeah. So if you just look at the delta right here, right? Pay attention to these. Like, look, you have positive delta, and then it literally stops. Delta's growing negatively in a change, even though you see here it's 66, but it went from 1200 to 66. How can you go from positive to such a low green if you're buying? To me, I don't keep this delta change. I do it in my, I guess, head. I noticed that shift between them, right? And I can, I guess, calculate in my head so I don't see a lot, but you can keep it.
So that delta change number is just kind of
Between
doing
the
what you just
candles.
did. 1265 minus 66
Exactly.
equals
Yeah.
11.
There you
Okay.
go.
Okay.
Between this and this, it's negative 112. And that's why I don't keep it. Just bothers
Yeah,
me.
yeah. That makes sense.
And here, 573 is just basically, if you think about the scale, if this is, you learned this in grade school. If this is 0, right, and this is negative 573 here, and this is 103, my son does this now. He's 6, so hopefully you guys can pick this up quickly. If this is 573 here, from 573 to here, what's the number? Basically, subtraction, addition, and you would get that delta change. That makes sense? Does everybody get it?
Yeah.
3.
She gone.
Yes, I get it. I know I'm not gone. I'm listening, but I'm cooking at the same time. Yes, I get it.
Good.
I know.
Good.
Then I got it.
Okay. So that's the delta change, and that's pretty much the cluster setup. The one thing that you guys want to do is you want to click on the settings and you want to click on the view. I use custom tick size. Sometimes I don't. I'm trying to set up a template where I figure it out what's the best way on the refreshes, different time frames. If you don't, you get something like this. After hours, when I do this, it gets a little bit better view. If you guys have a better way to do it in this system, share it, but this is what I do. Okay, and this was just right click settings. Okay. Any questions so far on the setup of the cluster? Good. Any questions on statistics of the setup of this time statistics here? Okay, good.
I know this is going to be. I know this is recorded, Shorty. I'm
Yeah,
not
I gotta watch.
disrespecting.
I
I'm
gotta watch.
watching and hearing. I am here.
Okay, no, that's okay. I mean, this is a long session, guys. It's been since 10. So now another cool thing about this tool that I really like is these left and right profiles. So if I want to see a profile for previous week here to be shown, I mean, look at this. I can see it really quickly here with minimal effort, right? I can just keep it and it stays static. Like you see here now where the volume is, right? This is my POC, right? You see it here. And if I want to see on the right profile, if I see my previous day in purple, I can do that.
Hey, Shorty.
Yep.
I think I just figured out the zoom thing. Go to zoom and put a zoom to cursor. You can zoom with your with the wheel of your mouse.
Yeah, that's what I do typically, but sometimes it's too much. My finger starts hurting.
If you hold control, it'll do the price zoom, so you don't have to go over to the price bar.
Oh, okay. I click control and what?
Hold control and scroll your zoom or scroll your mouse.
Oh.
Yeah, there you go.
Oh
That's
man, this is good.
That's a little quick trick, but
oh yeah, that's good. Well, there you go. That's the beauty of this. Oh man, this is good. So now I have a daily profile here, and I see the daily POCs here and the weeklies here, right? So now I can, gauge some rules about it, right? You have a strong sellers here, they won, and then you have buyers sitting at 44.20-ish, right? So, and we just talked about previously, you could expect them there as we are at this level, let's say tonight or whenever we open at 6. I would expect to kind of look at this level and see, how are we arriving at this level with the delta? The intention at this level would be for me to go long, and I would pay attention to the deltas. Are we, going from 500 negative? Are we shifting to green? And how aggressive are we? Okay. To give you guys a few scenarios. Let's see. It's gonna go maybe 1 hour. I'm gonna hide these for a moment. And the beauty of it, everything stays saved. I like this control feature a lot. All right. Looking at let's just look at these bars right here. And I don't know the levels. It's close to 4,500, right? Take a look at what's happening right here. I was looking at delta and I was able to kind of pinpoint here. If you look at this delta here, 174,000 contracts traded, green candle. I would say if you're to look at the candle profile, this would be almost like a P shape, correct? It would be majority of the volume occurring at the top, as long as we don't break the value area, right? And the value area is these little dots. You guys see the dotted lines, the blue? You guys can change that. I forgot to talk about that. There's a value area here, show profile, and you see the value area. I have the borders. You can do area, right, where it highlights it like this. Everything else below, that's not a bad view either. And then there's, you know, if you want to see the full view, this is this one here. Borders probably not too bad here, or whatever your preference is, right? If you want to look at area, value area, borders, you can pick this to be kind of green if you select the borders, and this is going to change to green or yellow. Does that make sense? So that's how I determine the candlestick value, right? And you see it. So here they broke above the value, but look what's happening in terms of volume, profile, and delta. You're coming up here and there's a decent size orders coming in at the ask, right? You see 11,555, and then they get aggressive selling right here at the top. What do you guys think is happening right here? Damn it again. Keep thinking that's the square I need, but that's not the square I need. Take a look at this box that I'm drawing in. Just
Finding new value.
But what is actually happening?
Consolidation.
No, it's absorption, isn't it?
It's a massive absorption with the traps being set on the top, guys. You know, this guy coming in here bidding, and look what is he bet with. You see the sell side? Look at the sell side there. It's a completed auction. This is a completed auction here. Completed auction, and they're being met like, hey, no, they're not going higher. And you see, you know, that there is orders here coming at the ask. 14,000, 6,000, they're coming at ask. There's a lot of orders on the ask side, right? But the delta is slowing down here. I would say by negative 8,000 between this one and this one, right? From that positive 5 to negative 45. That's a pretty big difference. But this candle made higher high.
And the volume went down.
Yeah, with a nasty wick.
Down, and now you have a really, really negative delta. If this was really, you know, if you look at this candle where it was positive and where it sold off, this becomes a very interesting level on moving down. Now you look at this, right? If you start looking at this a little bit more detail, you see the POCs of these candles. You see a POC candle shifted up here. They drove it back up here, and another completed auction. If the auction completed right here, what would that mean?
They're not willing to buy at higher prices.
They're not going higher, guys. There's no interest. The buying is complete. They're not finding, and there's a massive, massive POC here that you see. Is there any way to favor these rectangles? That's another thing I wish they had. So if you look at this POC here, I'm trying to draw it. Okay, that's close enough. You see that they're coming back here, and then look at the selling again. You have the limit sells that come in, and then you have aggressive sellers coming in. And basically, they're just compressing. Another buyer steps in from this level. You see it here. Geometry rectangle. Where's my buyer? There's an imbalance on the buy. And look at this. Again, he's coming in here again, trying to hold the price. But if this buyer is lost here in this range where aggression started selling right here, look what happens then. You go positive delta here, you bounce it 8,000, but you don't even make a higher high. Right? And then they continue here. They bring it back down and they just basically slowly fade away. And look at the pickup on this consolidation. You had a consolidation here, aggressive buyers, buyers, buyers. Once you break these aggressive buyers and you show aggression like here, I need to change that before I forget, sorry. Where's my color? I'll have to change the setting here. Actually, this one is not too bad either. Okay, so you're able to see, you know, there's some aggression coming in after that consolidation here. If you look right here, you know, the delta is positive, not making higher highs here. Unfinished auction here. There's aggression selling right here. I don't know if you guys can see a little gray number. And then there's, you know, POC shifts up again, aggressive selling as well. Aggressive selling, and look at the delta spike here. So on a candle that matches almost your high, your negative 1700, you drop here. Once you broke these bottoms where the buyers were sitting, you see here and here, look at the delta here. You came back for a retest with a completed auction this time, and there was no interest to drive the price higher at all. And look at the delta pickup here. Massive, right? And then I would say you're coming to the support, and look at the shift. You know, 107, big volume selling, and look at this here. I mean, on smaller time frames, I'm on 1 hour, but you see here, what do you see here on the bid happening?
Passive buyers absorbing.
They're coming in, guys. They're coming in really, really heavy here on buying side. Right. So if you're not sure, how would you go along here? You could definitely go along over, you know, 5 here. If you see the POC, what I like to look for, and I just messed up all these colors I worked hard for. And that one's just too bright for me. Now you're seeing there's some imbalance here, but we need to see a little bit more, you know, aggression on buying here. And they had some here, not as much here. Obviously, you see that on 1 hour, but the deltas went from -5 to -254. That's a huge drop in selling. And you're approaching a POC, and I mean, basically they just rocketed from here. And if you go on
Jordy, what's the RL? I'm sorry, excuse me. What's the RL?
That's your ratio. Yeah.
I'm sorry.
That's your ratio there. I don't use it much. There are certain rules people use. I think Jason plays the rules on that. I'm not sure if he uses it, but he uses that on trading. I don't.
Ratio of what? R to L. What is R now?
So basically, I believe he uses it on a buy and acceptance on the rejection, right? Ratio bounds high, ratio bounds low is what that means. And I don't use it personally. I don't even know how to get rid of it. And with that, I believe he uses it for reversals. If it's over or in a range of certain number, he uses it for acceptance or rejection. I don't use it at all.
Gotcha.
Just don't know how to remove it. Okay.
Thank you. Sorry about that.
Yep, no worries. So if you guys look here, let me go back to the level when. Okay, here's the level that we hit. I need to control that. Okay. So here's what happened as we're arriving, I would say on 30 minutes, right? You're coming here and you're getting some nice bid size order here, and the auction is completed. What does the auction again mean? If I put that in the PowerPoint, if the auction is getting completing on the sell side, here we go. Where is it? You see this? So let's go back to the PowerPoint. It's completed, right? There's nothing much more to sell. They're not willing to go. And then they reclaim the POCs. And here comes a little bit of buying and aggression again. And they really push that higher.
So for these reversals type setups, the delta, the volume, and then you're maybe marking a you're marking a POC on like a higher time frame to.
That's correct. I look at my volume profile in TradingView and I draw the levels. I'm getting more accustomed to, I would say, using, I can draw the POC here, FVP as well. For instance, if I want an FVP here, I can look at FVP here, and I know now the POC was 44.45. The value area low is here. Just a random section I selected. So I'm getting used to it, but I still rely on my trading view. I still think it's the cleanest volume profile drawing. So I would look at that, and then on smaller time frames, I don't go below 5 typically. I would look at the delta here as we're arriving. So let's go back. We need this yellow level to be hit. There it goes.
Yeah.
And now you're kind of able to see what's truly happening here. If you look here, there's a lot of delta, then they had a negative here, and then it really got absorbed here completely. Big absorption. And then look at the flip here. Above this 22 here, it really flipped to green. And then I would say the volume is pretty decent coming into it, right? About 18, kind of close to average, more than here where it was selling and approaching. And then it picked up, and look at the buying here.
So where is it that you go long?
I went long. I went long on a retest here. If you guys remember, I was actually going to a doctor. My stop loss was around 23.5. And this is where I went long. I believe it was somewhere around 25-ish retest here. And my stop loss was, I think, 23.5. It was based on one of the POCs. I don't know what time frame I was on. It was 23.5 was my stop loss. I think it was this one. My stop loss was here. Retest long was here. I was risking 2 points, and our target was 40. It was up to, I think it was 39. It was up to this POC somewhere. I had it on TradingView as a target. But it was just a flip on the delta that I was playing. I played this being a CPOC. This confirmed it, retest, and then long.
Right.
Let me find getting used to this control feature. Okay. And here's this sell-off on 5 minutes as well. Let's take a look at it. This is your on 5 minutes, and you can see here, look at this, 33. They're selling off here on a lot less volume too. And this is, I would say, what, 10 o'clock. And you're printing a green candle. And look at this, you're selling off here again. And on 5 minutes, that's also green volume on a sell-off. And here comes the real trouble. This is where they got into trouble. They sold off, they brought it back to the POC and reclaimed and went higher. And the most recent sell-off is here. Let's see how do I this helps.
Sure, I got a question. Whenever you're like trading during the day and watching these footprints, do you what time frame do you typically like to watch? 10 minute, 5 minute?
Look at them 30 and 5. That's what my screen usually has.
30 and 5 minute. Okay.
Yep.
All right. Sweet. Thank you. Yeah, I was
And
doing like
this
the 2 and 3 minute to begin with, and that wasn't really working too well. And then I switched to 15. I like the 15 minute.
Yeah, you can definitely. I mean, you use what works for you. I'm not gonna tell you, right? You use what I use, right? So,
of course.
This is the latest sell-off, and this is just an interesting point here, right? So if you look at this, we're arriving, the volume, is dying as you're approaching, and then you can see, there's some orders coming in on sell side as well. Here, there's some larger orders coming in because if you look at it, everything's below thousands here. And as you're hitting some resistance, they're coming in with large quantities, but the price is not hitting higher highs. And then you're starting to flip on the delta here. Negative 500 contract numbers doubled from previous candle. And here the volume is not aggressive, but you see that they're flipping the delta really, really quickly. And then I would say the break of this buyer here was pretty much the nail in the coffin. And then you had the POC. If you just grab, I would say up to here, and look at that POC, massive POC in here that they were not really able to crack through on any of the attempts. And that is to a selling. And then they picked it up here a little bit more. they faded this here till later when they picked up the delta right here. I would say what 230 or 240, I thought it was. They picked it up and then they went slowly. They accumulate, drop, and each one of them carried some heavy deltas on selling, like this one here, here, till they came to the level of, I think it was 37-ish, 30s, and they started buying it at 355. And for me, the best way I use this is if I find a support, if I find an imbalance to balance. For instance, if I'm looking at this area right here, it doesn't take much to notice that this was an accumulation period before they bounced. I can just simply look at the volume on this, right? If I grab it from here to here, and I can see where the volume is, where the value area is. So now let's say if I'm just basing what I see here, as we approach this level, let's say tonight, I'll be looking to see how the delta is behaving at this level. Is there accumulation? Is there, is it green, red, and how aggressive are buyers? The limit sells here. If they break above it, then, you slowly turn bullish, right? Based on what I'm seeing here. And if we arrive at this level, I would again look at the delta and find at what point do I get a retest? Do I go on a breakout or on a retest and go with the buyers, right? If that's what they're doing. You would make sure that there's aggressive imbalance to the buying side, that you're not buying into sell imbalance and aggression. So if you're seeing candles, if I'm seeing an imbalance as we're coming up, somewhere here, negative selling, aggressive selling, I'll be cautious buying it, especially if delta is negative. If I see us go from negative 2,900 and we're approaching 2,300, you're waiting, for it to flip or to get an aggression to hop in, or a retest of that aggression and go higher. Okay. And I will most likely start sharing this screen during the day, if it makes sense, right? So you guys get familiar with it, with the footprints, and then we can go back to the volume profile. I don't think I can split the screen in half, one volume profile, or I can just use volume profile from here. You guys will be able to see that. Okay.
That would be awesome.
Yeah, that would be very helpful, because I think a lot of us don't have footprint charts either.
Yeah, we can definitely do that. Problem is on the 49-inch screens, if I was to share it, you guys would not.
Yeah.
I don't think you guys would see much.
Yeah, I don't think we would.
Yeah, this is gonna take me a minute because to understand the whole. But
And
let
then
me
you're
ask you.
not gonna pick this up overnight. I think it's
No.
gonna be once we, you guys start using it, you get familiar, you understand the verbiage, the lingo, and you see, and I call stuff out when I'm trading. You guys hear me saying, hey, there's
Yeah.
a large imbalance, this is happening. And now if I start sharing this, I think you guys are gonna get in the habit of seeing it. And the more you guys see it, just like volume profile, half of you guys didn't know what volume profile was 6 months back.
Question, Shorty. Can you place trades based on the delta? And looking at the delta?
What like flips?
Yeah, like like going from obviously from sell to buy. If you're just looking at delta, you can place trades based off of just the delta.
Yeah, of course. Yeah. I mean, you can, but you always want some confirmation, right?
Sure, I understand. I'm just saying, like, until I understand the whole concept.
Yeah, you can definitely do that. I mean, if you look here right now, as we break this level there, if we break that 4420 I mentioned, there's a high chance we're going to go to that 80 area.
Mm-hmm.
Right. And I'd be interested to see what really happens as we arrive.
Gotcha.
So if I was to, turn this off for a moment. Like, here's the candles, right? Here's your regular stuff that you guys use.
Mm-hmm.
And if you go here, and I'm just looking at this whole volume profile now, there's the bounce right here that we had. Right on. So now, the key always, the sentiments, the CPOC in the bracketed market. So now we're watching what happens as we arrive here. We want to flush, but you got to watch for a trap here. right? They're really good in traps. So usually what you want the price to do, if you're trading, it really needs to step away a little bit, right? Let it go down. If you're using, 5-10 minutes, let the footprints create a lower, and then when they come back, let it go here, come back, and then look for a short. A lot of you guys want to immediately short here in a retest on, I'm charting 4 hours and you're using 30 seconds to getting a retest. Right?
Or I could also use Trading View for this, as far as this goes, the chart that you have on top, and use the delta as reference also, right?
That's pretty much what I do till I start liking the volume profile more.
Yeah, until I'm able to get it more, I can just use the Trading View to confirm, to have more
My idea
confirmation.
is eventually to have what I used to have with Thinkorswim. I
Yeah.
used to trade everything on Thinkorswim. It's just that commissions get a little out of hand, right?
Yeah.
Is to trade on everything in one platform, and it makes it
Sure.
easier, right?
Oh, yeah.
Like I will always trade options on TOS. Like I will never deviate from that. For me, the setup on options is amazing on my TOS.
Yeah,
But you see, Shorty, it did it on 520, or what is that, 626? Or yeah, it went back up and hit the CPOC, and you would think it was coming down. You were waiting for that. You said you'd wait for it to go below. It did the retest, but then it went up. So why would you do, if it
So you're
goes
telling
down
me-
this time, short?
So you're telling me from 44.24, let's say you shorted at 48.18 all the way to 43.97, you would not have taken any profits here?
Oh yeah. No, yeah. Okay, I didn't look at the. I was just looking at the chart. I wasn't looking at the
It's a
price.
20-point
Gotcha.
move.
Okay.
Yeah. And also just
most people in this Discord are accustomed to compound, and the more you get excited about catching 100-point move on a full position, the more likely you're gonna be miserable trader. Not saying it doesn't
Yeah, no,
happen.
but what I'm saying is, you said wait for it to come down, like now, where we are now at the
This
end of the
one
chart.
came down and it retested. What I'm saying here, it broke. But think about this as support and resistance right here. That's pretty much what it boils down to. And right, so this is your level right here on this POC. There's a lot of shelves here in this area. So you
Yes.
broke above it, right? You lost it, you came back. You can call this a retest of this range. Putting a POC on a single level is never probably a good idea, just because there's so much volume, there's large shelves in between. So I mean,
even that earlier one is a retest, right? Like,
which one?
yeah, right there. Yeah, like, yeah, right, yep. Like,
Yeah, I mean that's a good retest. You
because it went down to like 43.90s and then came back up to.
Because if you think about it, most people would have something like this on their buy, right? Even if you have it this way, I would say most would have something like this. But my volume is telling me something totally different, right? So this becomes almost like a shelf here, and I can't tell really clearly where shelves distribution is just because they're weird. But it's a zone, right?
That's what I got on there, a shelf.
If you're coming back, you lost it, you get a nice little retest, and then, just knowing some market structure stuff, right? If you look at this drawing tool, let's do trend, let's do horizontal. I mean, look what happens here. Like if you just look here for a moment. This is a consolidation here, and look at this candle that breaks it. A giant red candle, and then you're coming back to it. You came back and retested it. And then you drove down. Here you broke above it. You went far, right? You went to almost highs. You swept the liquidity, and where are you coming back? Came back perfectly to it, and you bounced up. So now, if you're able to lose this, we want you to, we wanna see a dump. We wanna see you go. Let me try to get this.
Retest and then go back down.
You want to go to you can't get the momentum break, but just know your momentum break, you have to have tighter losses, and your trailings. There's a lot that could go wrong against you. But if this goes down and then it comes back, this is really where you get interested to see, do you have a short opportunity or not? And it doesn't mean every time you're shorting this, right? If I see this and then I see a delta of 5,000 here as we're approaching this,
Hell
I have
no.
no business, honestly, shorting this. And if I see a big green candle with volume that's just as big, I don't have anything shorting this because it's telling me they're aggressively buying this. They're most likely going to break it.
Especially if the volume, coincides with the candle.
Yep, and that's just the VPA analysis from it. So.
Yep.
And here's your daily view. I mean, for instance, if you take a look at this, you look at the. Just pay attention. Let me remove all this. What do you guys see? Is there anything unusual here for you guys?
Well, there's an indecision.
An SR flip.
Okay, what else is going on here?
Well, I see a giant green candle with a pretty big negative delta.
Exactly. This is all fluff. This is all selling with double volume, guys. This is fake. Then you have 2 days, right? It wasn't that the holidays. And then what do you have from there? You have $1.7 million, contracts and negative delta of 30,000.
That's a lot.
This delta here, I'm looking at these support deltas here, and even all the way from here, none of them had nearly as much. I mean, if you do cumulative delta here,
it's going to be negative.
Where is the cumulative? Here's your cumulative delta now on the bottom.
So that's adding up every candle to the left?
It's adding up every candle to the left, yeah.
Okay. So right now we're at negative 30 cumulative delta for the last.
Yep. And I don't know if it looks right.
Yeah, it doesn't look right. That's what I was asking.
It doesn't look right because it shouldn't be same number here. I don't know if it's the same. I really don't know if it's after hours on this system or not. But you would see a delta. Let's say if you're zoomed in from here, you would see if it's 21, then the delta for this day was -5. It would be cumulative would be -16, and so on. And you'd be able to tell what is really happening, right? On the whole picture of the delta, where are we? But on day to day, something's off. I mean, you have double volume, but I mean, you really let them have it here. Like you offloaded inventory to them, and then you had 2 bullshit days of half days, and then you come out firing. Not as big volume here, but pretty aggressive selling.
So Shorty, how is there that much negative delta on that Friday? I think
This Friday, yeah.
Yeah. How is there so much negative delta and we end up closing that high, like near the high of day?
So majority of the selling was at the top. That's why you got the upper wick.
Probably the majority of it happened correct at the top, right? They come in.
Okay.
Remember, where do you want to maximize your profits?
Right at the high.
Right.
Price at the highest.
If you're smart, you're gonna sell at the highest point so you can make money.
So then that wick becomes a giant supply zone.
VIX always carry the deadliest. VIX are the breakers. They carry the deadliest shit in them. The bodies, nothing.
Right.
These are the damage makers for me.
And then that is your secret supply, secret demand, right? When overlap 30.
Which one?
Just in any scenario, like where
you would have some secret, like there's a secret demand right here. There's some secret demand right here, right?
Oh, so it's not when the wicks overlap; it's when the opposing
there's
wicks overlap.
overlap right here. There's a wick overlap, and this becomes your secret demand, and they bounced right here.
Okay.
There's a secret, now you come up. So now if you look here, there's a small, I would say, secret. It's not really trending one, but if I was to find one, this would be a secret supply that's sitting there.
And again, why is that secret supply? Because which wicks?
It's this wick here into this candle and this wick into this candle.
Okay, got it. Okay.
And they're trying to kind of hide it a little bit.
Okay.
And you see now they're selling off from each one. I mean, you want stacking candles and trending so you can find them, right? Like you see here, there's at this point, there's really not much that you can find. There's some here. And then on a daily, I would say there's some right here. See it right here.
Yep. Okay.
That secret supply was at 44.64.
There's one right here right now.
That's a secret demand, right? That you're drawing right now? Okay.
And then there's one.
Yeah, I think that's the one. That's the one.
Circles everywhere now.
I think that's the one I'm talking about there.
Yeah. So I mean, it's not guaranteed. There's just something that worked before, and it doesn't mean it won't.
Yeah.
It's just good to draw them.
That goes right into that consolidation. At
This
the
one
end
here,
there.
yeah.
I got you.
Okay, so we'll share more on these, and I'll do a better job probably on the PowerPoint to add actually more examples as I'm able to find them of things that are happening on the cluster charts. For instance, if you look at this candle here, what is really happening and kind of give you a visual. The idea is that I find this candle, right? You see this right here. Let's say this 112 here, and kind of see it between regular candle, right?
Yeah.
And see what is actually happening there on this candle here. So you guys can actually
Yeah,
kind of relate to it, right? And be like, okay, well, I see what's happening. I see where the buyer stepped in.
Yeah, buyers are pushing up.
So I think that will help most of you go from regular candlesticks to this. So you know this candle looks like this, and this is where selling was. This is what happened. So that's the next step, and then sharing a little bit more with you guys daily on screen, so you guys can see it.
Jordy, can you
I think with the
can you share your template for Quant Tower?
No.
Yeah.
Yeah, I'll share it. I don't know if it's ready, right? It might need adjustments as I just have a couple of questions for support, and once they come back Monday, they'll hopefully resolve it.
Well, even if it's just like a preliminary, that would be awesome.
Yep, I sent you preliminary, right? You have it.
That's the old one though. Now you're using the.
That's why I didn't want to send it, because I'll have to not stop send these till I get to. I don't think I'm final yet on this. I don't want to just constantly keep sharing something you guys constantly. I know it's just a document that you upload in the templates, but let's get it a little bit closer to complete, maybe 80% complete. I think it's more like 60% done now.
You mean the settings on the?
Yeah, there's settings that that bother
Gotcha.
me. Once I get it, I definitely don't mind sharing them. But yeah, that's the idea.
Yeah, I think I got the old ones too, but that's okay.
Yeah, I'll share this, but there's changes coming.
Main thing.
Yeah,
is
please share it. Thank you.
Yeah. All right, guys. Well, I think that's it for me. The kiddos just woke up, so hopefully it was a good intro session in the footprints. The next thing is for you guys to actually have it. See, you have to spend some time with it. I mean, I don't know how else to say it. If you're not going to spend time with it, you can't learn from listening to me or anyone. You have to see it in action. You have to apply it, see it, what happens, and kind of start trusting. Even if you trade one MES off of the logic, off of the setups and volume and this, it will build confidence. Even if you trade one share on AMD or Pfizer or something, and you apply same logic on volume, you will be able to document those trades and see, does the system work or not? And you'll find out yourself.
Yeah.
Okay. All right, guys. Well, hopefully you guys have a good day and a good session. I'll most likely see you guys around 8:30. I'll try to hop on if the kids are asleep.
Sounds good, Shorty. Thank you. Enjoy your day.
Thank you, Shorty.
Thank you, Shorty.
Have a good day, everyone. Thanks, Rocket.
Thank you.
Good day, everyone.
All right, Jody.